Right, everything looking good. Up and rolling. Go ahead and get this stream started. Welcome back to the channel. Crypto Trend Trader with our midweek market update. It is September 15th, 2021 at 8 p.m. Eastern Standard Time. And before we get started, I would like to remind you, this is not financial advice. I am not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, looking good. What's going on, my friend? Good to see you over there. You ready to do this thing? Get it started? Let's go ahead and start where we always do. Jump right in with the 10-year Treasury Yield. Basically nothing happening over here. We had a pretty powerful push down yesterday and a push right back up. We are still just kind of hanging out at the 200 exponential, 200 simple moving average. Not really seeing a ton either way on this right now. Still fairly neutral overall on the daily. Weekly still, I would say probably neutral to bearish. And finally, the monthly still just consolidating under the 8 and 21. But the histogram is above the slope line. And the longer we spend above that slope line, the more likely it is to flip over blue. And then we're likely to go into a more of an uptrend, or at least bullish consolidation before continuing to the downside. But it's going to be difficult for us to continue down any further, as we were basically already at zero. You know, TLT, 20-year Treasury bonds, pushing back up towards the upside. Obviously, you know, inverse correlation to the Treasury yield. But this is a 20-year as opposed to the 10-year. We are underneath the slope line. Slope is pointed to the downside, but we are over the zero line and have green histograms. Getting the buy signal from the neutral zone above the 200 exponential with a positive slope. 200 simple is still sloped to the downside, but if we hang out long enough on top of here, we should get continuation to the upside. As far as the weekly is concerned, we did bounce the 200 simple well above the 200 exponential and simple. 8 and 21 are still crossed to the upside. We have blue slope line, green histograms. We are in or just leaving the bullish control zone with a hard sell signal. But overall, I would say still bullish neutral. You know, and this is a tough one because it's going to be directly affected by Fed policy. And then TLT on the monthly, well below the slope line, at about the zero line, couple green histograms. Stokes are trying to move back to the upside. We are still on top of the 8 and 21. You know, we still got about 2 weeks left in this month, so we'll see what happens. Let's do it. That's right, brother. So we'll see what happens with this. You know, this is so dependent on policy right now. I mean, literally, if they start to taper, it's going to cause extreme pressure on bond prices. Just the announcement of a taper will cause extreme pressure on bond prices. I think whatever happens, you know, obviously the CPI numbers basically alleviate some of the pressure. Because if the Fed's sitting here and they're causing the inflation, and they're saying they want the inflation, and then they're saying, look, guys, the inflation's going away. There's no inflation. But everybody knows there's actual inflation. Obviously, if you go out and try to buy anything, you know, that's going to obviously make the market think, oh, okay. But, I mean, it's not like the Fed is stupid. The Fed is smart. They know what they're doing, for the most part. They think we're stupid. So that's the differences. They're just, everybody, it's obvious to everyone right now that there's inflation in goods, there's inflation in services, there's an inflation in cost of goods, as far as, like, you know, for businesses, for people, you know, for everything. There's asset inflation. There's even wage inflation now. You got to pay people more if you want them to work, you know, and all of it is obviously caused by the policy of the government and the Federal Reserve. So it's in their best interest, obviously, to stick with the whole, like, there's no inflation. Like, for instance, if I'm your kid and you keep finding money missing from your wallet and you're like, hey, I'm missing like $20 from my wallet. Did you take it? It's in my best interest, if I'm the one stealing your money, to be like, no, you didn't have $20. I didn't take it. Like, I'm not going to be like, oh yeah, I do remember seeing you had $20, but I mean, I don't know what happened to it. I mean, I'm not going to obviously fess up to it until it's too late. And then, what's the Fed, what's the government fessing up to it? They're like, oh, actually, inflation is really bad, so we need to stop these asset purchases. We need to raise interest rates. There is a ton of inflation. So, we got to be realistic here. If they're literally pissing on us and telling us it's rain, and some of it goes in our mouth and we're like, oh, that's awfully salty. Must be some sort of weird, salty acid rain. And they're like, no, just regular old rain. It's probably just global warming, climate change. As we can see with the VIX here on the daily, we came up to that exact area, which was obviously the double heart line, the heart line of the channel, the heart line of the descending channel. And then obviously we have our 200 exponential and simple clearly in a downtrend. And once again, we got rejected at those levels as expected, which is basically going to tie in inversely to the stock market getting bought up essentially. So if we go over to, let's skip oil and we'll come back to it. Let's skip oil for a second. If we just look at the Dow Jones now on the daily, we will see obviously same thing happen again. We had that pretty violent sell-off. We got bought back up almost all the way. Another pretty violent sell-off to slightly lower low. Got bought up almost back to the way. The most important thing I'm paying attention to is we are now below that resistance that we flip support, this green line right here. So to me, that's a breaking point. And then obviously also we had this ascending blue trend line as well that we have been respecting pretty heavily. It started back on February 21st, essentially this point here. And then, we touched it again on March. And then each time we've come down to it, we've gotten less of a bounce these times. And then now we have broken through it. It's not unrealistic when we break through an ascending support line like this to push all the way back up, put in a new high, and then get rejected at that trend line. So I would not be surprised in the slightest bit if we basically saw something that amounted to price pushing back up here and then getting rejected at that point and then getting, basically like an actual sell-off like that. It doesn't have to happen, but it happens very often in markets and is unexpected because as soon as we put in a new high, everyone gets bullish again. But what did they do? They basically just bought the breakout and then get stuck upside down in the position from, record highest prices ever. Or essentially somebody has a stop loss and they put the stop loss slightly above that point. So maybe they're not even intentionally buying, but the moment that it goes to a new high, their stop loss position gets taken out and then they've essentially just bought because they had to close their short position at all-time highs. So it might not be like they're consciously like, oh, I'm buying the breakout. Sometimes you were literally just short and then your position is to buy the breakout and close your short position. Or flip long, essentially, whatever. But again, we're paying attention to this key area right here. Seems very important to me, obviously. We broke down from a key ascending support line, which is less weighted, as where, a horizontal is much more weighted because it's not nearly as subjective. So when we break through this, we come up and get rejected essentially at it after basically what amounts to a week of selling and break of key zones. The 8 and 21 on the daily have crossed to the downside. We got the hard sell signal. We obviously had left the bullish control zone. We're below the zero line. We now have a red slope line on the TJD, TDMACD, and all red histograms. So at this point in time, I don't think we're just going to get some capitulation event that comes in, but I do think we will see continued selling throughout the week. How this week closes on Friday is going to determine probably the overall confidence of the market. But what I'm expected right now is probably the push down here to the green box area at like 33.6 roughly, 33.550, somewhere around there, which is going to line up also with the top of our ascending, or well, really it's just a megaphone broadening wedge. So I think that is most likely our target. And then obviously if we take away the drawing tools, it's very clear that that is just a retest of the 200 exponential on simple. So, depending on when we come down to them, it could be slightly higher. If we just came down to it tomorrow, it would hit right on our box right here and also the previous low right here. So I think that's probably our target, somewhere around like 33.250 to like 33, let's say 500. But essentially what we're looking for now is we're seeing weakness that we don't normally see with continuation. Now it is possible obviously that we get continuation to the upside, but once the 200 exponential is on top of the 200 simple, that's going to be more reactive to price. So if the trend is still gaining strength to the upside or even just maintaining current strength to the upside, we should be seeing the 200 exponential stay on top of the 200 simple. But we'll see here now for the first time since the lows at the CVD dump, since we got that cross back here on September of 2020. We'll see now that the 200 exponential has crossed above, 200 simple has crossed above the 200 exponential, telling us that the trend is weakening. Each other time when we got the 821 cross and we broke down and found support, the 200 exponential was above the 200 simple. So the trend was still strengthening. So what we need to look out for now is there an actual change in trend taking place right now? Does that mean we have to just sell off and go to zero tomorrow? No, not at all. But what it means is every other time throughout this trend, we were in a powerful uptrend and it was gaining or at least maintaining strength to the upside. Now we have, basically more and more of our little warning signs, our little lights flashing, telling us that this trend is potentially slowing or coming to an end. So that's what we're paying attention to. Most people don't lose their money in a bull run. Most people don't lose their money in a bear market. Most people lose their money in the switch between a bull market and a bear market. You either, buy at the top and then price starts going down and you keep buying the dip, but the dip takes a dip and the dip takes a dip. And the next thing you know, you don't have any more fuel. And, in a situation like this, where the economy is potentially waning or weak or being artificially propped up, which it clearly is, and then you're investing in stocks. Well, if all of a sudden we go into like another recession or depression, it's possible your income flow could be affected. Therefore, you might not have that dry powder to buy the dip. So that's why it's so important. And then, also the opposite. People get used to shorting throughout a long bear market, and then all of a sudden it flips over to a bull market and they can't recognize that the trend has changed now. So that's why it's so important to have a clearly definable way to determine trend. So for me, that's why I use the TJD, TDMACD, I do use that, obviously, the Jewel Thief as well, but that's why I created the brand new indicator, the Master. And it's the moving average strategy that I use to determine a bull market or a bear market. So now here we are on the weekly, and as long as we're above the 200 exponential and 200 simple, and they are sloped to the upside, they're blue like this, we're in a bull market. We're in an uptrend. So on the weekly, we are still 100% in a bull market on the Dow Jones Industrial. And we will notice, the last time we went into a bear market on this indicator based on my strategy, the way I determine it, was in 2008. So what was 2008? Well, this was the mortgage crisis. So once we had broken down from the 200 exponential and simple, we came back up, retested them, and once price action was below the 200 exponential and simple for long enough, they flipped over, the slope became negative, and then this indicator turns, purple for the 200 simple and red for the 200 exponential, telling me clearly at just a glance, we're now in a downtrend. I no longer want to be buying dips. I want to be selling rips. So the difference being, every time we take a dip in a bull market, you want to buy because you're expecting price action to go up. Then you buy the dip, then it goes up, then you buy the dip, then it goes up, then you buy the dip. And then you start to notice based on the 821 here, once we get the cross on the 821, you say, hang on, there might be something taking place. Something doesn't seem right, but I'm still going to buy the 200 exponential and simple because we're still technically in a bull market, but I'm seeing a lot of confluence that potentially the trend is changing. And that's what the 821 is doing. It's telling us the trend is potentially changing, but on a longer time frame, moving average, we're still bullish. And then eventually we bounce to 200 exponential and simple. We put in a lower high, telling us once again, things are changing. We're now putting in a high and then lower high. The trend is starting to look more bearish. And then of course the breakdown to the 200 exponential and simple, last ditch effort. We attempt to push back up one more time. The slope flips over to red on this or purple, depending on which one you're looking at which point in time you have officially entered a bear market. So how much time did that save you? How much price action did that save you? What is the purpose of this strategy and why does it work so well? Well, if we look at time and we look at percentages, it was a 44.8% decline, so roughly a 45% decline, and 203 days. So if we can have a strategy that saves us 203 days worth of pain and buying dips that continue to dip, and then also 45% of our portfolio by exiting positions or at least not buying any further positions, that's going to put us at an extreme advantage over somebody that just holds through that downtrend and just suffers. And that's assuming that you just have diamond hands and you can just hold and you never sell. And then eventually, obviously, what happens? Well, we're in an 821 cross to the downside this entire time. And then here we see, based on my strategy, the way I determine these markets, and the trend, we see now a potential change in trend starting to take place. So the same way the 821 cross to the downside was here, but we still had a positive trend on the 200s. This was our warning sign. This was our confirmation that we're in a bear market. This here is our warning sign that the bear market is ending, or, warning sounds bad. Obviously, maybe it's like, a ray of sunshine, some hope in the markets. And then obviously at that point in time, you can start laddering back into positions, but you're really not overall completely bullish on the market again until actually way further down the line. So at that point in time, we're looking to enter positions here, but still cautious. The same way that we're looking to, exit positions here, but still cautious that we may decline further. Once we finally get on top of the 200 exponential and simple, we bounce the 200 exponential and simple, one more retest by the bears to try to push price action back down. Or maybe that's not even some manipulation and the bears and the bulls are really the same people, but it's just algorithms trying to determine if now the market is strong and wants to continue to the upside. So at that point in time, we bounce the 200 simple perfectly. It still has a negative slope, so we're still cautious, but the 200 exponential has had a slope to the upside that entire time. Well, let's talk about two things here. So obviously, once we're on top of price action, the 200 exponential is sloped to the upside. The 200 simple is sloped to the upside. They're now both blue. We have the 821 cross to the upside. They're both green. That is full on, risk on, absolute bullishness in these markets long term on a weekly time frame based on my personal strategy. Now, what we're paying attention to, though, obviously we can look at the other indicators and oscillators and get an idea of moves and when we're gaining strength and losing strength, all that stuff. But something key happens here. It doesn't happen at the top because we lose strength so fast. The 200 exponential is above the 200 simple the whole time. So we had the bright blue above the dark blue the whole time. And then actually they cross right here at the same time that we basically flip into a bear market. But once the 200 exponential right here crosses back above the 200 simple here, even though it's slightly before the 200 simple flips over blue and we get like the confirmation, it tells us here that we're now not only going to the upside, but we're gaining strength to the upside. So that's the, obviously the opposite of what we were talking about earlier, where we had a situation like this that's currently taking place on the daily, where we've been in a long bull trend to the upside. And then here we have basically the 200 simple, the lighter blue, well, depending on how you look at it, the more shady looking blue, not the bright blue. Once the shady looking 200 simple blue, the slower to react, crosses above the 200 exponential, it tells us this trend is weakening. So that's a sign of weakness. Hang on, something's not right here. We're losing strength in this trend, and now the 200 simple is on top. And then we break down from that, come back up, retest it. But you'll see here the 200 exponential and simple both still have a slope to the upside. So technically we're still bullish in these markets, but we've gotten a warning sign here. We've started to get warning signs from the 821s crossing to the downside. And then here finally, this is our last attempt. This is currently what is happening with Bitcoin right now that we're paying attention to. We have broken back above. The 200 simple went above the 200 exponential after we peaked out. We then put in a lower high here. We broke down, came back up. We're on top of the 200 simple and 200 exponential, trying to cross these back to the upside, trying to maintain price action on top of these two long enough that we can go back into a continued bull trend. But what, so basically we're in like the risk off or the danger zone. But, we have this easy spot now to manage risk off of, because basically if we stay above the 200 exponential and simple long enough on Bitcoin, we're going to go back into a bull trend and it's risk on. Let's go. Parabolic move to the upside, $100,000, $75,000, whatever our next target is, $500,000, whatever it is. We're very close to confirming one way or the other whether or not the trend is going to continue to the upside or go to the downside. Now, obviously, because of the 4-year cycles and how close we are to essentially like that December time frame, which based on our other 4-year cycles has been, the final market top, all of our cycles previously, which we only have 2. But, if you only have 2 data points, you might as well respect those data points over some mythical like imagination that we're just going to keep going on forever and there's lengthening cycles and all this stuff. Well, based on the actual mathematics of Bitcoin, based on the actual code of Bitcoin, there's not lengthening cycles. There's not. It's 4-year cycles. It's based on the halving event. So that's what I'm going to go with is the actual information until the information changes. So what I'm saying is that over the next couple months, I do not expect us to continue to the upside. If that happens, if we get back on top of the 200 exponential and simple, if the slope continues back to the upside and price action starts to move away from them, then I will get bullish again. But until then, I'm expecting a situation like this to play out. Now, how long is that going to last for? We don't know, and we won't know until it happens. But based on previous experience, it's probably going to be about a 1 year bear market from the top to the bottom, roughly, and then about 1 year of consolidation and movement to the upside, and then the halving event hits, and then we go parabolic, and then we do it all over again. So that's what I'm paying attention to. That's how it, how that chart looks on something like the Dow Jones. And then obviously, it looks like here, oh, well, look, we were at the bottom here. Why didn't we buy at the absolute bottom right here? We start dabbling around at the 821 cross right here. We come up, we start selling into the 200 exponential and simple, assuming that we'll get rejected. And then when we start moving on top, once the 200 exponential flips to the upside, the 821 or to the upside, we start getting bullish with larger positions, start buying into strength, dollar cost averaging into strength, not buying the dip because we've been in a bearish trend this entire time. And then finally, once that cross happens, once we're back above the 200 exponential and simple, then we can start looking at, re-entering the positions, and we'll see how effective that is if we waited until the 200 simple crosses above the 200 exponential and they both have a slope to the upside, and we buy into them, and then we just stay in the market until, basically both of them flip back to the downside, which they didn't technically here. So on a weekly, you would have been in the Dow Jones from then until present, and you would be up 185%, and you would have just been long one single time for 3,548 days. So for the last 10 years, you would have just been in this position, set up, good to go. So, depending on what time frame you're looking at, that's relevant to what time period and how often you're going to be making those trades. But the fact of the matter is, this signature right here tells me one of two things is going to happen. We're either going to go into a consolidated bear market, or we're going to reclaim this price action, and then that's a beautiful place to manage risk off of. So for me right now, I'm de-risked on cryptocurrency, waiting to see how things play out. Still have open positions in the stock market, still have some open positions in crypto, but at this point in time, I have basically front run my quarterly rebalance by a couple weeks. It was bound to happen regardless. Okay, it was bound to happen regardless. We're 2 weeks away from the end of the third quarter. A lot of these, we basically pulled money out of Bitcoin after, before the big drop, put money back into Bitcoin around $30,000, rode that up quite a bit of the way, pulled a lot of those profits back out of the market, and then put them into the altcoins, which were lagging behind. Then the altcoins shot up, and we took money back out of them and put it on the sidelines. And then once again, bought the dip when Bitcoin took its big dump again, back down recently. And then once again, took some small scalp positions along the way, had some altcoin positions that ran, etc. But a lot of those positions are up now, 100, 200, 300%, depending on which ones and how parabolic they went. So at this point in time, our crypto portfolio is way out of whack. It's way out of whack. I mean, there's no reason not to be just taking some of those profits and doing the rebalancing, or at least starting it a little ahead of time. So that's my personal attitude right now. Is we're at a decision point. We're at an inflection point on the market. We might as well just lock in a bunch of those gains, sit back, and wait for the opportunity to present itself, which we're actually going to talk about two main sectors that are presenting themselves for opportunity right now as well. And I'm not talking about just some shitcoin rally. I'm talking about actual sectors and potential like big movements. So, and one of them is actually contrarian, or like contrary to what I actually see on the charts, but looks good overall. So we'll get to that in a little bit here. But essentially that's what I'm looking at on the Dow Jones. Obviously we're paying attention here on the monthly that we are now getting our first red histogram. We are basically maxed out on our stochastics. We're at like 96, which is essentially the top of the range. And now we can see the 8 and 21 are still technically diverging, but they're starting to basically converge. We're seeing this one start to roll over a little bit. This one's going to creep up behind it. It's a little slower to lag. So we just want to pay attention to, are we going to get a situation like this? Something like a taper tantrum, or, whatever, all of a sudden inflation's through the roof, whatever the situation is, you can call it whatever you want to call it, but we typically see it in the charts way ahead of time. And then here, if we flip back to the weekly, we can see already, we basically have only bounced this weekly 21 a couple times along the way, and they're getting closer and closer together. The first time was a retest and confirmation for continuation. The second one, we got a little move here. The third one was a true test, a big sell-off here that got bought straight up, and then we gapped up. And this is a breakaway gap. We never came back to this gap on the weekly to even attempt to close it. I mean, we had a little wick down here, but we left a nice gap back here. That's totally fine. But after that, we never touched a 21 here, didn't touch it here, and then we finally touched it here, and now we see the two moving averages converging. We touch it again shortly after, and now here we touched it, and we're just hanging around, finding resistance at the 8. So we basically have, over the next 2 days, we're going to determine, is this going to be basically, we have a close here, and then we have an open. So the way we determine a trend is not by a close, we determine it by the close and then the open. So if we have an open and a close, like a close, then an open and closed candle in between those two moving averages, that's going to look very weak to me. And we'll see here we have here we have a close in between those two moving averages, and then we open and we shoot up above it and we don't worry about it. Here we have a close below both moving averages, and then we open and we close back above them, and then we continue to the upside. Here a close, open, back to the upside, and then here a close, open, back to the upside. So if this candle, this little itty bitty guy right here, closes below the 8 moving average, which is basically 35,000, give or take, that's going to be the first time since our dump way back here when we had that happen. And what we'll notice is that's going to tell us potentially that there's something going on and a change in trend on the weekly time frame here. Now, obviously, if we look at the weekly indicator oscillators, the TJD TDMACD has been red literally since, we had our last green histogram was May of 2021, and then we had one more green histogram, and every other one has been red. We're obviously well below the slope line. The slope line has flipped over red now. So that is very bearish for momentum based on the Trader's Dynamic MACD, which if you're not using these indicators, they're all free except for the TJD Master. That one is only provided for free for people that are in the group. So, and then the other, stochastics, basically what we're looking at here is, once we leave the bullish control zone and get a hard sell signal, we're cautious, obviously, based on stochastics. But again, as long as the trend is to the upside, things look good. So even though through here we had a sell signal, a buy signal, a sell signal, and then we finally left right here, we actually got picked back up by the 21 and then saw slight continuation back to the upside for a new higher high. Now here, but at that time, we were still above the slope line. It was still blue, even though we had red histograms. That was telling us basically we have one thing that's bullish here because we're still on top of the blue slope line, so we're still in an uptrend. Here we have one thing that's bearish, and you could argue two things that are bearish because we have a bunch of red histograms, but we're still above the 8 and 21, bouncing the 21, and we don't have an open and close below the 8. So now here we're seeing what's potentially, the way I trade, the way I determine trend, we're seeing a potential for a topping pattern taking place. So what we're looking for is, do we close now and then open and close a weekly candle underneath the 8 moving average? That's going to be our first warning sign that this is potentially about to top out and that we're close to getting a potential cross down and weakness. Still overall in a weekly uptrend. But now here we have a hard sell signal and we have left the bullish control zone. So now we have a potential bearish signal here. We have a bearish signal here. And now this is bearish as well because we have a bunch of red histograms underneath the slope line. So now this is completely bearish. The only thing that's bullish about this is we're above the 0 line, but that's essentially very bearish to me. This is very bearish to me too. We have left the bullish control zone. We have a hard sell signal. And then this is starting to show up as bearish. So as far as I'm concerned, we basically are like 66 to 75%, bearish on the Dow Jones right now on a weekly time frame. So, and then when you start coupling in things like divergence, like here we have a high on the price action. Here we have a higher high on price action. Here we have a high on our indicator oscillator. Here we have a lower high on indicator oscillator. Here we have a high on the indicator oscillator. Here we have a lower high on the indicator oscillator. It's giving us weekly bearish divergence. So, when we couple all those things in together, that's where I say I'm like 75% or so bearish on the weekly time frame for the Dow Jones. Does not mean we don't put in a new high before we sell off. Does not mean we don't just continue to the upside. So I'm not going to go in depth as much on the other indexes. I just wanted to talk about why I'm paying close attention to that right now. And here on the SPY daily, we'll notice we have closed down below the 8 and 21. And then essentially this push up today was to stop the cross from happening. So any more downside at this point in time, we're going to get the cross. And obviously we had a slight cross right here, which we averted back in May. We had a slight cross right here for a couple days back in March, and then slight cross. But this was the main cross that mattered, which was February 2020, the big dump. And then obviously, based on what we were just talking about on the daily, when did we get 100% bullish again on the S&P? Well, right about here. Once we were back above the 200 exponential and simple, and they both had a slope back to the upside, that was at $300. Since then, roughly 50% gains. Even in these areas right here where we saw some warning signs, we were still well above the 200 exponential and simple. And then again, we're paying attention to on the daily, 200 exponential is still above the 200 simple, but we now have the hard sell signal. We have a potential cross about to take place here. We have a bunch of red histograms in a row. We have a red slope line. So again, on the daily, this is starting to look very bad, at least short term. Does not mean we don't put in new all-time highs this cycle, or continue to, I should say. And then again, if we just switch over to the weekly, we'll notice a very similar signature here. We are still inside of the bullish control zone. So even though we have a hard sell signal, this is still overall bullish to me. We are still above the 8. So that moving average wise, still bullish to me on the weekly. But here's our warning sign. We have now crossed below the blue slope line on the TJD TDMACD. You'll see here we have a bunch of red histograms, and then we have sort of some reds and some greens coming. But this is confirmation for the first sign of this flipping over to bearish on a weekly time frame. If we spend too much time below this now, the slope line will flip over red, as it did just for a moment back here while we were still above it. And then obviously that will be the second switch this indicator to predominantly bearish. But we're still well inside the bullish control zone, still on top of our moving averages. Everything else still looking good on a weekly. We do have a little bit of divergence taking place, bearish divergence taking place. But overall, I would say the S&P looks stronger than the Dow Jones. And then here, if we just switch over to the monthly, still all green histograms. We are basically at unrealistic levels to maintain. We're up here at 98.27. So there's nowhere left to go. So at some point in time, we need to at least cool off. Does not mean this has to be bearish. We did diverge pretty far here for the first time away from our 8 moving average. If we look here, we basically have the 8 moving average directly on our ass. This is like the like racetrack dog chasing the bunny, but never quite catches it. Well, here we have diverged away from it, and it's not able to catch up to us. So at some point in time, you expect it to basically catch it. Whether it's price action slowing down and then the moving average catches up to it, or whether it's price action actually selling off like this, one way or another, price action will eventually catch up to it, even if it's just like a sideways consolidation like what happened back here. But again, on the monthly, still overall very bullish. If we see this candle start to do a bearish engulfing candle, if we start to see some of these other things flipping over like the histogram or a cross, even though if we're inside the bullish control zone, then we can start to get bullish on or bearish on like a monthly for at least some sort of prolonged correction. But right now, there's nothing telling me that this is like going to be some big market crash. This is like the end of everything. But it's not unrealistic to think that we could have some sideways to down price action coming up. So and my target is still valid too. 4,600 or $460, and it's that same price target we've had for a while. So we're almost there. Do we get there? I don't know. We'll have to wait and see. Nasdaq, we obviously had the ascending triangle. We got the break of the triangle, retest for strength, came back down one more time, put in a higher low. So we have a series of higher lows, a breakout of a clear and defined area, a retest support resistance flip right here, and then a higher low after that, followed by a series of higher highs. Still very bullish on the Nasdaq overall. And obviously this could change depending on what rates do, depending on what the economy does, earnings, it can change, but it's not going to just change overnight and all of a sudden I'm like, oh, I'm bearish now because we dumped. It doesn't work like that. I still expect our measured move to play out and another 18% to the upside for a target of roughly 16,000. That's our measured move of the triangle. And then obviously that's our initial target up here. It is possible we get up higher to some of the Fibonacci extensions. We do something crazy. This would be a full-on melt up. 18,650. Is it unrealistic? I mean, it seems like it right now, right up until it, it happens. If all of a sudden we get some ridiculous spending package, if all of a sudden Fed coin comes out, if all of a sudden, you know, the Federal Reserve or the Treasury starts just like airdropping money into people's accounts, you know, some new program comes out to bail out the economy, anything could happen that can make us hit those targets. But everybody's going to look back and say, oh, well, the only reason we got here is because of this. The only reason this happened is because they printed so much money. But the technicals are already telling us that's a potential area that we're looking at as a top or a next target to the upside. So, you know, show me the chart. I'll tell you the news. I'll tell you what the news is going to be. I give you 3 main scenarios that potentially get us to that target. Does it have to happen? No. But right now, probability still to the upside on the Nasdaq. And also, we need to remember, we went into a long consolidation period and we had a pretty big sell-off from when, you know, basically these things were like the hot stuff. 12%, a lot of the individual stocks inside of this index sold off, you know, 30%, 40%, 50%. But again, we have to be careful of bearish divergence. We do have a hard sell signal. We are looking like we're about to get the 821 cross on the daily. But again, if we just flip over to our weekly chart, you know, weekly starting to show some signs of weakness. 821 looking to potentially cross and get a hard sell signal, but we would still be obviously well inside of the bullish control zone. Each previous time we saw this signature happen, you know, this was obviously the CVD dump. That was a big one. We saw that coming. We were able to get on the right side of it. Worked out perfectly. But what we're paying attention to is from that hard sell signal, we actually still put in a higher high. Went up another 3%, and then we went down 30%. And then the next time we got that same hard sell signal right here, you know, once again, from the top here, if we're going, you know, wick to wick, obviously not realistic, but just to get a rough idea of what to expect, you know, 12.5%, 12.6%, same hard sell signal we got back here, same thing at the top of the triangle to the sell off, that was roughly 12%. So if we do get the hard sell signal right here, what I'm expecting based on these previous 2 corrections is about a 12% correction, which is not unrealistic. You know, where is that 12% correction going to take us? Well, if we say we go from the high right now and all of a sudden we get the cross down and we sell off 12%, it's going to take us basically back to like the entry level, you know, price target back here, which is roughly 13,500. If we sell off to 13,500, is it going to look terrible? Well, we'll have broken down from a key resistance turn support, so that will look bad. We'll obviously have a lot of weakness on our indicator oscillators, but it doesn't mean that, oh, it's over, the market's top, To even get into a danger zone on a weekly chart like we did back here, we would have to come all the way back down to the 200 exponential and simple. And, you know, when you start looking at these indexes, you know, like Dave Portman says, these things only go up. They're designed to go up. This is a hardcore crisis if we ever are below the 200 exponential and simple. This was 2000 tech bubble burst. This was mortgage crisis burst. This was CVD. Okay? So this was nothing. This was nothing. The little pandemic, it was nothing. We didn't even, we literally didn't even get an open close below these. We never even flipped the slope over negative. So what's the likelihood we're going to get some crazy event like that and go into a bear market? Extremely unlikely, in my opinion. Does it mean it cannot happen? Does it mean it's not going to happen? Not at all. But very unlikely to just be starting to call out crazy bear markets and 90% collapses of the stock market and all this stuff, et cetera, et cetera. The probability has it more likely that we would just continue melting up and that one day something will break and it will not be fixable by either the government or the Federal Reserve. And then eventually we'll see, you know, a crazy change in our lifetime. But it's probably not going to happen this decade, honestly. Maybe we'll see. We'll see. Monthly chart, still very strong. Stokes are still angled to the upside. We are still well above the 821 angled to the upside. All green histograms, still very bullish looking on the monthly chart. So, and then finally the Russell. Russell is obviously the worst of all these stocks. It has basically just been trading sideways inside the range. Once again, you know, this is our third macro lower high. We have a high back here. We have a series of lower highs right here. And now here we have a third macro lower high. Most likely what's going to happen, we come down here, we retest the bottom of the range and the 200 exponential moving average. We see extreme weakness on the Russell as now the 200 simple is above the 200 exponential, and we have tagged it multiple times, you know, on the daily. This, well, not technically multiple. We almost tagged it here. But that to me is extreme weakness. If we just for reference look back, look how far away the S&P is from the 200 exponential and simple. Or I'm sorry, the Nasdaq is. Look how far away the SPY is from the 200 exponential and simple. That's back down, 10%. Dow Jones, still, way down here. So just to give us an idea, the Russell is extremely, extremely weak in comparison to our other three main indexes. What's up, Peter? Good to see you, my man. Woo woo is right. Let's go. And then if we look at the Russell on the weekly, again, we have been seeing weakness in the Russell since, essentially February of 2021. We have never seen two green histograms in a row, except for this tiny little pushback up off the bottom of the range here. We are still well above the 200 exponential and simple. The exponential is on top. We are seeing quite a bit of weakness here. And obviously on the weekly, we are barely hanging on to, let's turn off our drawing tools. We're barely hanging on to the 821 at this point in time. If right now the week closed where it's at, we would be closing below the 21 moving average. We did it a couple other times and we were able to sell it, but each time we're putting in a lower high. And obviously these are converging, showing us that the strength is weakening. Typically what happens when you see a trend like this taking place is, especially a consolidation period this long, typically it'll be a reversal break. It could very easily consolidate on top of here, and then we just burst to the upside and the trend continues. But more likely than not, looks like this is topping out on a weekly. Still a little too early to tell, but, potentially something like this taking place could be something like this, where they look like it's going to weaken and then boom, continue new all-time highs. Now, what I'm paying attention to here is, though, we basically have our high right here, weakness since then. If we switch now over to the monthly time frame, what does this look like now? And I know a lot of people are saying, no, this isn't how markets stop out. We're going to go parabolic. Well, if you zoom out, we've been going parabolic for, a year and a half at this point in time. So it's not unrealistic to think that, when we look back at this, it's going to look like a realistic top. Now, this one looks more like a rounding top, but if we start getting massive selling coming in, the other indexes are going to look like a blow off top. Honestly, in my opinion. But, there's two ways you top and bottom. This is a way that you top and bottom. This is like a blow off top, but obviously a bottom. Okay. Then you can also have like a rounding top, something like this, where you basically just show weakness, 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 and then kind of sell off, put in a lower high, and then bottom. And then we go back up like this. We don't need to get a blow off top that looks like this reversed. We can also get, basically like a rounding top. And that's what it looks like this is doing right now. On the monthly, the Russell is very weak. Obviously, we can tell that by the other time frames. But this is our third month in a row of red histograms. And again, while we still have the purple Stoch headed to the upside, the blue one is obviously headed to the downside. We're still well inside of the bullish control zone. We're still above the 8 moving average and well above the 21. And obviously well above the 200 exponential and simple. But as we can see, based on, a monthly chart for any of these indexes, the 200 exponential and simple is our buying area. That's what we're looking for. And we can see why these are so important and why I use both of these. Well, if you were using one or the other, you missed a massive signal in the market, because the initial sell-off for the CVD dump tagged perfectly the 200 simple moving average, and then the second pushback down that ended up in a rally tagged perfectly the 200 exponential. So if you were only using one of these, if you were using the 200 exponential, this overshot might have scared you and you wouldn't have took a position. If you were using the 200 simple, this second pushback down here might have undershot and you wouldn't have entered a position. Somebody is using both these other than us. Enough people that it's determining price action beautifully. So in my opinion, and part of why I use them in my strategy. So yeah, that's it for the old Russell. Let's keep going here. We'll look at our sectors next. XLB was looking very weak. Obviously materials has been looking very weak. It put in its high back in May and has been basically in a consolidation downtrend. We got our measure move breakout. It played out perfectly to the upside. Percentage wise, not that great, but you're probably not going to get rich off the material sector. Let's be real here. Without, crazy, I shouldn't even say that. With the options and crazy leverage, sure, this 5% move could make you rich, but that's nothing compared to what most of us trade. So here we have the 821 crossing back to the downside. Obviously starts looking bearish again, as the last time that happened was the big sell-off right here. Is it possible we get a situation like this and then continue to the upside? It definitely is. This could easily turn into a bullish consolidation where we basically just sell off, consolidate, and then eventually push to the upside. But we are seeing weakness throughout on the daily here. And let's look at our weekly, just because it's been a while and I know other people are looking to rebalance, or at least I hope people are looking to rebalance. So they're paying attention to sectors as we get close to the end of the quarter here. You know, this weekly for the first time is looking, you could argue the weekly looked weak here at the bottom, like it was getting ready to roll over. But, you know, if you got bullish on this at $53, you got a pretty nice move up here to $83. If now it crosses back down and it's going to potentially come back down to some of these moving averages. We're not seeing any bearish divergence taking place between these points or anything like that. So, you know, obviously nothing cluing us in that this is just going to have some massive dump or anything. But it does look weak, obviously. XLC, communication sector, you know, still very strong, still up here near its all-time highs. We did get a hard sell signal. We are seeing a bunch of red histograms. We're not seeing any bearish divergence or anything. We did close below the 21, and obviously the 8 is, you know, approaching fast. This has not had a negative cross since back in May. You know, before that, March, we had a couple along the way up here, but none of those times did we come down to the 200 exponential and simple. We had a almost retest back here in June, but, you know, based on obviously our trading strategy and the way I determine it, once we were back on top of the 200 exponential and simple, if you simply just entered into a position, you're up 65%. You have made one single trade, a buy, and no sells. So, you know, that's for people that are looking to like invest but trade and can't look at charts every day and make moves every day. They're not looking to trade a 4-hour or 15-minute or a 1-second chart. This is the strategy that, in my opinion, is most effective. And even if you make trades on smaller time frames inside of this strategy, you know predominantly, once we cross back up here, you know we're in a bullish uptrend. So you don't want to be taking short positions. You're not, you know, you may hedge a position if we start to get like an 821 cross like this, but you're not looking to be net short on the market. So communication still very strong here. And then obviously if we look at the weekly, slight bit of weakness, but overall hard to argue that you're not still bullish on this. We are seeing the MACD, TJD, TDMACD, or Traders Dynamic MACD showing us some bearish divergence. We are now below. The histogram is below the slope line, so the slope line is potentially going to flip over red soon. So we're now seeing our first, which is more red histograms than greens, and our second, we're underneath the slope line, and it's potentially going to flip over red. So we're seeing basically our first indicator flipping over bearish on the weekly for communication. And then if we take a look at this, we basically have like a same top high right here. We do have a bearish cross. Sell by sell divergence signal, but we're still well inside the bullish control zone. We're still above the 8 moving average. So again, this still looks strong in my opinion. Communication sector strong and probably will remain strong. XLY select sector, consumer discretionary fund. You know, we have broken out of a key resistance here. We did not maintain it as support right here, which is a sign of weakness for me. And then once again, broke back above it, did not maintain. So this level to me is not that strong, but obviously worth paying attention to. But we did put in obviously a series of lows, higher low, higher low, higher low. So now if we come down to this area, I would expect price action to get picked up on this slope line here, but we really only have like 2 points. So that's not very strong to me. I would expect the ascending resistance line to be stronger, as we've seen, you know, quite a few times. We basically bumped our head on that. But essentially at this point in time, I consider this to just be a range. We're trading inside of an ascending wedge above resistance at basically all-time highs. I think consumer discretionary is still very strong. We do have a hard sell signal. We are below the slope line, seeing more red histograms, and the slope line is flipped over red. And then obviously, you know, depending on how you look at this, if we go from the open right here, since it was like a slight gap up, you know, we have technically put in some bearish divergence on some of our indicators. You know, depending on which points we look at, it's a little convoluted through here, but definitely worth paying attention to on consumer discretionary. And then if we look at the weekly, we're still well above the 821. We're still well above resistance. The weekly candle looks bullish. We're still inside the bullish control zone, but we are below the slope line here, and the slope line is red. So, this is typically what you will see in a melt up. We are losing strength, but we're continuing to move to the upside. So definitely some warning signs showing up on consumer discretionary, which makes sense as, people start to run out of like free stimulus programs in the United States / the world. XLE, I mean, there's still plenty going on though. Shit, you want that free money? You don't want to go to your job? We gotcha. XLE, energy sector. So by far the weakest sector, obviously, as it is not even close to putting in all-time highs. So that is worth note. This is very clearly the weakest sector in the market. We are maintaining above the 200 exponential and simple, but again, very weak as we have retested them multiple times. We do still have a positive slope to the upside, but we need to be very careful. Now, what I'm paying attention to that we did through here that makes me actually bullish on this sector, and I have been at least for a temporary move to the upside is, we have a very powerful push down here on the TJD, TDMACD. We have a very powerful push down here on the Jewel Thief on our stochastics. That corresponded to this low right here and a buy off the 200 exponential. The second push down here was a lower low. And then here we'll see on our indicator oscillators, we have a higher low. And then here we'll see we have a higher low. So we're looking at basically this peak and that peak and this peak and that peak. And both of those have a higher low on our indicator oscillator and a lower low on price action. That is very clearly bullish divergence. So even though we broke through the 200 exponential and simple, that tells us we're likely to get a counter trend relief rally. So if we're looking at the short-term trend is to the downside based on the 821, we're bouncing a key support and we're seeing bullish divergence play out. So we would expect a counter trend move. So the small trend that we're paying attention to is the downtrend. So we expect an uptrend. Now, does that mean we're going to take out this high right here and continue to the upside? It does not mean that at all. But we are seeing now we have crossed above the zero line. We have more green histograms than red. We have flipped the slope line from red back over to blue right here. So it's telling us the trend is actually gaining strength off of 200 exponential and simple. Although the 200 simple has crossed above the 200 exponential, we have now crossed the 821 to the upside. We are now, approaching the bullish control zone. And we'll see here the blue Stoch has basically bounced well, it's trying to, or is crossing currently back above the purple. So this was like a fake out sell-off, and it looks like we're going to see continuation. Now the knife, it's hard to see, but is all the way up here at the key levels where it typically tops out. So if we look at the previous times when we saw like a big knife strength, it was near the end of this little trend. Then we pulled back. Then again here we see the knife strengthen to the upside. We see a little continuation, then selling off. So likely at resistance right here based on these 2 points right here, seeing some kind of strength pick up on this, but probably just going to be a short-lived bullish rally to a lower high off of this point here. And if we flip over to our weekly time frame, we will see that on the weekly, obviously we are in a very, very bearish trend on the energy sector as we have been underneath the 200 exponential and simple since October, the made-up month of 2018. And then obviously you can see from the 200 exponential and simple, clearly red and purple. And going to the downside, this was just our two rallies on the weekly were just a retest of first the 200 exponential moving average, and now here the 200 simple moving average. We were in an 821 cross to the upside on the weekly. We crossed them to the downside here, and we're attempting to save that cross. Now, if we rally back up here, the more times we test the 200 exponential and simple, the more likely we are to break through. So we're on a weekly chart right now. This could push back up here, come all the way back to 56, another 10% or plus rally, 12% rally, and then come back down. And then what we're looking for is basically our low right here. We have a low here, then a high, then we have a lower low right here. So what we want to see this do is put in a higher high and then start pushing through or consolidating to potentially break. And this would be, basically a macro entrance to a potential flip in energy sector to the upside. Is that going to happen? Well, probably not. We're going to assume that the predominant trend, which is bearish, will continue. But that does not mean we don't put in a new high. The most important thing, though, is when we come back down, we put in a lower low. So we need to put in a new, a higher high based on this one right here. Or else what's going to happen, and when we look at this, we're going to see a low, then a higher high, then we're going to see a lower low, then we're going to see a lower high, and that's telling us this trend is over and we're going to get rejected right here and continue to the downside. So that's our two situations. We're obviously below the slope line on the weekly. The slope line is still blue, but that's a bearish indicator. We obviously have the hard sell signal, and while the blue stochastic is starting to turn to the upside, it looks like we basically just bounced the bearish control zone. Like our purple line right here at the 20 level, looks like we're basically just bouncing, attempting to try to stop the bears from gaining control. If the bears gain control, we see that's typically corresponds to a massive dump, pretty heavy dump right here. But again, we're paying attention to this. Overall, still bearish. And then if we switch over, we'll actually look at the monthly on this. I think that's important. While we're looking at the daily and saying, oh, we're starting to look bullish on the daily, the weekly still looks bearish, but potentially could flip over the bearish trend. But here, if we look at the monthly, we are still below the 200 exponential and simple on the monthly, and we have a red slope on the 200 exponential. And if we stay below 65 for much longer, this is going to lose the slope and flip over bearish and go into a macro bearish downtrend confirmed for technically the first time, in existence of this chart, which goes back to 2000. So we're paying close attention to it. Obviously a monthly chart, but as long as on the monthly we're still above the 8 and 21, it's going to look like we're basically just beating our head on the moving averages, trying to flip this trend back to the upside. So eventually, if we start to close above 65 bucks on the XLE, I'm going to be extremely bullish on energy. But what we're seeing here on the TJD TDMACD is we now have green histograms above the slope line, and the slope line is blue. So while here we actually flipped the slope line over blue, we never actually made it above that. So the three ways I determine trend on the TJD TDMACD for a long-term consolidated like uptrend or reversal potentially is three parts. I want to see multiple green histograms. That tells me we're starting to see some strength for the first time and a potential reversal is taking place. Then I want to see this cross above the slope line and the slope line eventually flip over blue. That's the second one. And then finally, I want to see it above the zero line. So I want to see a positive histogram versus negative. So obviously this is the zero line. So now this is confirmed on a monthly. All three parts of this indicator are bullish. Also, if we look at here, the stochastics on the monthly, obviously a hard buy signal, cross to the upside and leaving the bearish control zone. That gives us, basically our bullish signal. But the final bullish confirmation on this is we're inside of the bullish control zone. Once this red lights up back here, that's extremely bullish. Stokes are angled to the upside. We're inside of the bullish control zone. So, and then here we have the 8 and 21 cross to the upside. So we basically have two indicators that are completely bullish, our two indicators for trend on the monthly. And then we have also half of this indicator that is completely bullish. We have the 8 and 21 cross to the upside, so this is green now. Both of these are green. They have green slope. They're crossed to the upside. That's great. But we're still technically we're 3/4 bullish on this because the 200 simple still has a positive slope, even though we're underneath it. But the 200 exponential we're underneath and has a negative slope. So basically, energy is actually looking bullish for pretty much the first time since January of 2020. And obviously it had a pretty heavy sell-off, but if we go back on top of this and we see this trend play out, this type of trend plays out and typically lasts for quite a while. So we can see like the previous times when we saw this same signature, we were above, in the bullish control zone, 821 angle to the upside, blue slope line, depending on where you're going from without cherry picking too much, we saw basically 150% move to the upside, and we saw this trend last for 1,400 days. So, that's quite a long time. You want to be bullish in that trade on energy. And then again, we saw a little itty bitty moon right here and then came back down. But again, we see a low, a higher low, a higher low. And then, obviously that tells us the trend is still to the upside. But here we'll see we got that same signature once again right here. Hard buy, entered the bullish control zone. We saw a decent little push to the upside, 32%. And, basically 2 years bullish on oil. So, or on energy, I should say. So, this is starting to look good on a long time frame for basically the first time. While again, we broke above the 200 exponential, we've come down and basically are finding support on it. And this is starting to look more and more like, we have a very clear defined resistance right here, which is basically where we're at now. We have a potential left shoulder here. We have a head here. We have a potential right shoulder right here. This is starting to look like basically an inverted head and shoulders off of a key support level. And then obviously that was our moving average cross right here. So I'm actually very bullish on energy based on the daily and monthly, if we get this breakout right here. So, again, that doesn't have to be confirmed, doesn't have to play out. But at this point in time, we're seeing quite a few things telling us that it might be time to, start getting pretty bullish on this. But again, we could easily come back down here and retest. And this was just part of the head. A lot of things could happen right here. Wait, did I mess that up? A lot of things could happen right here, as this could be slightly sloped head and shoulders, and it's already playing out, and we're getting ready to break out to the upside. If we got a break right here, we would expect a continuation of the inverted head and shoulders, or alternatively, what I was just drawing there, we could basically be coming up here, get a rejection at our resistance line right here, and then come back down and put in a higher low from the previous head, and then we get a breakout to the upside. I'm still overall thinking that we're going to get continuation on this, but it is starting to lose some strength. So, obviously we'll pay attention to the charts. We'll see what happens here, but energy sector is something to pay attention to. And, this is going to be a macro determining factor based on everybody that's like, no, clean energy, electronic vehicles, oil. There's we're actually going to talk a little bit about oil and Queen Kathy, and I'm going to make fun of her for a minute, have a little fun. XLF, financial sector, still strong up here at our highs essentially, but potentially looking like a little double tap on the daily. We did cross the 821 to the downside, came back up to it for a retest, and it looks like we're getting rejected. I still have the target to the downside of the 200 exponential and simple. We're seeing some weakness here between these points and some bearish divergence. We saw rejection on the stochastics as well as we put in a higher high. So again, we're seeing some bearish divergence. This looks like it's going to get weak. And honestly, I think there's a lot of stuff telling us that this is probably the area to pay attention to. We have a very clear, resistance that turns support basically through here. So that lines up almost perfectly with the 200 exponential and simple. We are seeing the trend weaken as the 200 simple is getting ready to cross above potentially, but I would expect that area, the 200 exponential and simple, the support, I would expect all of that to act as support when we come down to it, at least the initial test. So maybe a 10% to the downside, and then we come back up in a lower high. Maybe we see continuation to the upside, but the financial sector is, for being at all-time highs, it's looking weak based on technicals. But we're seeing on the weekly, 200 exponential is crossing back above the 200 simple. We are seeing some bearish divergence playing out between our indicator oscillators here, or bearish divergence developing, I should say, maybe not playing out. But again, this could see continuation and invalidate it. But this, to me, is a top. That's a high right here. We have a lower high peak right here. We're below the slope line, and it is still blue. But we're seeing a bunch of red histograms coming in, and then obviously we have a high here and a higher high here. Typically, I don't pay that much attention to divergence for an overall trend change, a topping or bottoming, until I see a third drive on a significant time frame. So I want to see a daily or weekly, and I want to see either bullish or bearish divergence with 3 individual points of divergence. Typically, the second point will result in a counter trend move, and then the third one will result in, basically a big reversal. So that's what I'm paying attention to. But obviously financial looking good, still on top of the 200 exponential and simple. So any pullback we see on this, I would expect to be short-lived, and still looks very bullish on the monthly. Let's look at industrials next. XLI, obviously, we've talked about this one quite a bit. Up here at all-time highs, we are starting to basically go sideways so long that the 200 exponential and simple are catching up. We're seeing the 200 simple back above the 200 exponential. Quite a bit of weakness. We're back inside the bearish control zone. We have all red histograms. We're below the 0 line, and the slope line is red. We have the 821 cross to the downside. It looks very likely at this point in time that we will be retesting the $100 range. It's only a couple percent away. This doesn't move fast. But if we pay attention to, let's go to our longer time frame first. The weekly, it looks like we're getting ready to have the 821 cross to the downside. If this week closes below here, it's going to be tough to get back above these moving averages. And for the first time, it's going to look like basically since our cross to the upside back here at 68, it's going to look like we're going to cross back to the downside. At which point in time, I would not expect us to get all the way back down to our 200 exponential and simple. I would expect more likely than not, though, a move back down to like $85, which is pretty substantial, for industrial sector. This thing's not going to move like freaking Bitcoin, but, a 16% to 18% downside is pretty big. You know, these are real companies and actual businesses, not just like, you know, Dogecoins. And then obviously we're seeing weakness. We left the bullish control zone back here. We have a hard sell signal. We have all red histograms on the weekly. We are below the slope line and it has flipped over red. And then obviously our 821 cross would basically be confirmation that this is entering back into a weekly, at least short-term correction or bear trend. And then monthly, still pretty strong, but we're seeing some weakness here, our first red histogram. And then if we just switch over to, I'm going to go ahead and turn off the moving averages, and I'm going to turn on our drawing tools. Just to kind of get an idea as to what we're paying attention to. You know, if we really zoom out on this industrial, we have from our massive bottom back here in 2009, aka, you know, the mortgage crisis, obviously, which makes sense. The industrial sector would take a pretty big hit during that. We have been operating inside of this blue channel the entire time. We've been in the top half of the channel, and we've been seeing quite a few, you know, times we retested the heart line in green here and found support. And then here, our CVD dump, we broke down from it and we retested the bottom of the channel for the first time. So you say, well, there's no way you could have that drawn in. Well, yeah, you can, because you have the top of the channel with a bunch of points right here, and then you have the heart line with a bunch of points right here. So that gives you an idea as to where you might be bottoming out. And we'll see that it did act as a bottom. So because this has been a bottom since 2009, you know, for basically 12 years plus, I would expect any moves to happen in the industrial sector inside of this channel on the monthly. So if we look at that in the grand scale, we are very, very close to the top. We're very close to the top of the channel, within a couple percentage. You know, the top of the channel is basically at the 1.618, which is $121. So potentially have another, you know, 20% move to the upside. But if we look at to the downside, what we're talking about, eventually if we come back down and touch the bottom of this channel, you know, that's like a 32% to the downside. So more danger to the downside potentially on this. We're also seeing a little weakness here, still inside the bullish control zone. But now if we look at a shorter time frame, go to the weekly, we can see that we are operating inside of a smaller channel. And this smaller channel was from the CVD dump right here, bottom. And then we started doing the exact same thing on a smaller scale inside this yellow channel. So now here we'll see once again, we have a yellow channel to the upside with multiple touches on the top. We have a very clear heart line here that was acting as resistance and then support throughout the move up. And now here we are potentially breaking down from that support. So if we continue to hold this support, I would expect us to break to the upside and leave this small channel here and complete the 1.618 moves to the top of the channel and roughly $120. If we see a break or consolidation here for too much longer, I would expect us to come down to what's going to amount to a key area here, because it's the bottom of our yellow channel, and it's also going to correspond perfectly with the heart line of our larger blue or green heart line here, which is going to tell me that probably if we come down to this area right here, that's going to be a buy. I'm going to want to take a buy off of $90 roughly on this, assuming that what has acted as support here, you know, slight miss, you know, throughout this area here will continue to act as support. And then here we see obviously resistance as well, potential support on that little gap. And then again, I would expect that to be a buying area. But does it have to work? No, of course not. We're definitely seeing some weakness taking place. But at that point in time, I would rather buy this and assume price action is going to continue inside this channel, continue to respect the heart line, and then potentially get a move from this area of like 90 back to complete our macro move, which is our potential target up here at 120. Because from 90 to 120 is a respectable move. You know, that's basically a 33% move on the industrials, you know, which don't happen like crazy fast typically. So there's a little deep dive on industrials. And I know I'm treating this a little bit more like a monthly close, but I'm trying to look ahead. And I was looking at a lot of these on longer time frames myself, just because of, you know, like I was talking about, I'm basically rebalancing or already scoping out some of the different sectors that I need to rebalance to and from based on this stuff. So if something's looking really weak, but it's underweight in my portfolio, I'm not going to just pour a bunch into it if it looks like we're going to get continued weakness. But if something's really strong and it's looking like showing some weakness, I'm obviously going to start balancing away from that some. So speaking of, here we have XLK, tech sector, obviously trying to stop the 821 cross from happening. We had it happen a couple of times on the daily. We're seeing a very clear bearish divergence taking place between our previous high right here and our high right here. We have red histogram. We have hard sell signal. We left the bullish control zone. This looks like a reaction rally attempt to save this. I do expect this to sell back off. And when it does, you know, based on this previous little like double top right here and where I anticipate the 200 exponential and simple moving averages will be by the time we get there, which, you know, just roughly going to be like, you know, beginning to mid October or somewhere around there, you know, that's going to look like some serious confluence. Our previous like tops right here that we broke out of, and then obviously 200 exponential and simple, that is a buy for me right around 143 roughly. You know, assuming obviously the macro doesn't just get crazy all of a sudden, etc. But, you know, this has been obviously just floating up, melting up, whatever. You know, still seeing quite a bit of strength. We did save the slope line back here, but we're seeing a couple red histograms in a row on the weekly. Does look like we're about to get the sell signal on the weekly, but still well inside of the bullish control zone. So, you know, that would correspond with basically a short-term, you know, consolidation or sell-off back down to support, and then we would want to buy that support because we would expect continuation. But again, we'll have to wait and see what happens with that one. And then on the monthly, you know, this is when people say, that's not what a blow-off top looks like. We're not going parabolic. Well, what is this? This is a blow-off top. That's what people picture when they see a blow-off top. We go absolutely parabolic, straight up basically, and then we see capitulation move to the downside. Well, how does this look any different than this? You know, in my opinion, this looks like we're at like stage 9 of 10 in a blow-off top. Like, I mean, a couple large candles here, and that's a blow-off top, you know, if I've ever seen one. And we've never seen this amount of strength. And then, you know, on a monthly time frame, we're up here at 95 on the stochastics. And, you know, we've literally only ever been up to 95, this little bit right here and this little bit right here. And what do those correspond with? You know, they basically correspond with this top right here, which we saw a violent sell-off, but it immediately got bought back up. But that's 27% dump right there. And then this little sell-off right here, again, violent sell-off, didn't quite get bought up, saw a little more continuation, but we're talking about like a 24%. And then the one that happened after that is, you know, slightly less of strength on the stochastic, but that was our 33% CVD dump right there. So, you know, potentially entering the danger zone where we would expect roughly a 25% sell-off. Now, you know, assuming that just happened and we didn't go any higher and we saw that 25% sell-off come in or 20% sell-off come in, where's that going to take us to? Well, it'd be like a retest of this little peak right here from September, August, September, around like 123. So, you know, and again, to me, it's going to be a buying opportunity unless something changes on the macro. So, but overall, tech looking good. Looking strong. XLP Consumer Staples, and I'll jump over to chat here. I see you guys in the house chatting it up. We've got a few more to go, and then we'll take a little break. I'll chat with you guys, etc. XLP is looking so basically Consumer Staples still roughly at our highs. Starting to see a little weakness showing up. Let's actually take off. All right, well, let's leave on the Fibonacci extension target for a minute. This is our breakout move that would roughly take us up to like 74. Also corresponds with the Fibonacci top to the bottom of the channel right here of the 1.618. Now, we topped perfectly at the 1.5. This still looks overall strong, although we're starting to see some weakness. So we'll see what happens with that. Maybe the 1.5 is as high as we get. But essentially what I was looking at was the measured move of this channel break right here. And essentially all that channel is, well, we just cruise sideways inside this channel for week after week after week. You know, couple very clear supports, couple very clear resistances, and then the measure move is just the distance from the bottom of the channel to the top of the channel. It's possible we don't complete that measured move. We got, you know, halfway, slightly more than halfway there. I wouldn't be upset if it didn't play out, but I am seeing, you know, essentially some weakness and potential double top here on the daily. And it looks like we're holding that resistance turn support for now. If we break down from that area though, I would expect at least to move to the heart line, or once again, we have quite a bit of confluence here with the 200 exponential and simple and the bottom of that channel. Now we're seeing some weakness. We're below our slope line. The slope line is still blue. We did leave the bullish control zone and get our hard sell signal. So we are definitely seeing some weakness taking place on the XLP. But we'll see what happens here. Again, we're seeing very clear bearish divergence developing. Here we have a high and we have a lower high. We're back down below the slope line and it has flipped over red. So that is looking weak now at the top of the range. So it's not unrealistic to think that this support is not going to hold and we're going to come down to our green box target area and bounce at least temporarily. Now, could we get a little lower down here and potentially overshoot the bottom of that channel, but then just find support at this little top right here? We definitely could, and I would not be surprised whatsoever to see that act as our support and just slightly overshoot that channel and get bought back up. So that's going to be a buy for me around that area. But again, we are seeing some very clear weekly bearish divergence developing, and then on the monthly, still very strong. We're up at, we're seeing only strength and momentum in our favor for now, at least on consumer staples. But starting to see some very clear weakness on the daily. So XLRE, real estate sector, obviously very strong. We're below the 8 and 21 now, potentially looking for a cross down. We basically had, from when we crossed this trend over bullish, we basically had one test of the 200 exponential and simple, and then we were able to save every cross. So if we see these flip over red and we see this 821 cross to the downside, that's going to tell us potentially, that this is the danger zone. And that we're probably going to revisit the 200 exponential and simple somewhere around like 42. And that's probably going to correspond with some serious weakness in the market. What's that going to look like? Well, maybe it's the evergreen blow up coming over to the United States. Maybe it's a bunch of extra houses coming on the market because everybody kicked out all the people that were basically squatting during the eviction moratorium. Maybe people are defaulting. Maybe they just want to sell their house because they're tired of dealing with renters and they don't trust the government now. When the government socializes private property, which is essentially what an eviction moratorium is, well, really the government didn't even do it. Technically, the CDC did it, which is a private business, which has no right to impose on people's ownership of property, without compensating them, which they did not. They created that quote unquote program, but they did not compensate people. So in my opinion, that's illegal. And the CDC and the United States government should and probably will face some sort of repercussions for that because they basically screwed over owners. In my opinion. Now, and that's controversial. Maybe you say, well, what are they going to do? Kick all those people out on the street? We would have had a homeless epidemic, blah, blah, blah. You know what? You're looking at one side of it. I'm looking at both sides of it. No, they shouldn't have kicked all those people out on the street, but no, they should never. The government and a private institution does not have the right by the U.S. Constitution to take your property and give it to someone else and tell you you can't take it back or that you have to let them live there, etc., whatever the situation. So I don't care what side of the argument you're on or if you think it's fair to kick people out on the street. The fact of the matter is we have a constitution, and when private businesses and the government don't honor the Constitution, they should be, they should suffer the consequences of it. And whether that's just legal recourse, whether it's financial compensation, whatever, total bullshit in my opinion. But whatever, I might be biased because, I pay my rent and I don't even want to get into it because I understand people are struggling and I'm not trying to personally attack anyone. But, the government put a bunch of situations in play to basically financially compensate people so they would pay their rent, and then they just said, but you don't have to pay your rent. So a lot of people got a bunch of money, bought a bunch of stuff or invested or whatever, and then still didn't pay their rent. The government did not get the money out to people that needed that money. So in the end, in my opinion, small businesses and small landlords got really, really screwed over in this situation. So we'll see what happens, but this would be a change of trend. What leads to that, what the fundamental cause is, whatever, it doesn't matter. The fact of the matter is, we're seeing it in the charts developing here already, and a potential pullback to the 200 exponential and simple. And then obviously, the buying of mortgage-backed securities, pumping up the markets while there's no supply because people can't kick people out and sell their house if they want to, et cetera. You can't default on people for not paying their mortgages. There's a bunch of things basically that have caused the real estate to go parabolic. I do not like this candle right here, while it's technically not a bearish engulfing candle, that is extreme weakness to me and what you don't want to see at the top of the trend. Because if we see any continuation to the downside, it's going to look like that was a top. So, but we'll see what happens. We're seeing a bunch of weakness here. We have a sell, buy, sell signal. We are still technically inside the bullish control zone, but very close to exiting it. So that's going to tell me on the weekly, based on this single candle, based on this indicator, and then a bunch of red histograms, you know, losing strength, but still above the slope line, still blue. But that's going to tell me that we're probably very close to, you know, basically like the real estate sector topping out. And again, you have different things inside of this. It's not just people who own homes. There's, you know, a lot of stuff inside of these different like sector funds that will be basically, you know, you have like a large company buys up a bunch of houses and then rents them out and then either pays like dividends or grows the company based on, you know, the rent appreciation, etc. So, you know, this is essentially just reflecting the entire market, not just mortgages, not just homeowners, etc. So, weekly and then monthly, starting to see probably, I mean, you know, this monthly candle obviously doesn't look good, but overall still very bullish. You know, obviously at all-time highs, 95. So unsustainable trend, but again, clearly like what a parabolic uptrend looks like. So is it realistic to think we're going to go sideways or pull back here? Yes, probably. But real estate obviously was very strong throughout all this. And, you know, you would expect, obviously, real estate and, I mean, you know, if the government's buying 40 billion in mortgage-backed securities plus a month, you would expect real estate to do well, especially if, you know, you can't foreclose on people or kick them out. Probably going to do well. And then transportation, finally, this is the one that I'm paying the most attention to. Semiconductors, transportation, and obviously overnight repo facilities, all very important to me as they are leading indicators. We see, obviously, transportation sector topped out back here. I'm not sure why I'm on the weekly. Must have just left that up. Topped out back here in May of 2021. Went into a downward consolidation pattern. 200 simple crossed above the 200 exponential. We did bounce them the first time, but since then it looks like obviously weakness and we're potentially putting a lower high. We did see the slope line flip back over blue, but to me this looks like a bearish consolidation. So a bullish consolidation is where the indicators and oscillators go down while price action goes sideways. And then you have refueled for a continuation to the upside. A bearish consolidation is when price action goes sideways or floats up slightly while the indicator oscillators, float up and then price action basically goes sideways. So to me, this tells me as these start to just creep up here, but price action just goes sideways, we're probably just refueling for a continuation to the downside. This is obviously weak too because it's bouncing in 200 exponential and simple, and almost every other sector was much stronger than this. So, you know, this is telling me once again, you know, potential weakness. Matter of fact, let's look back at the daily, and then I want to just talk about this. This was leading up to February 2020. So what were we seeing in transportation? Well, this is weakness. This is massive amount of weakness for years. So when people say, oh, COVID caused all this, everything was great, the economy was humming, we were flying, we were ripping, everything was great. Well, I mean, according to the transportation sector, from 2018 and then the top here in September of 2018, so basically January and September of 2018, and then breaking down below 200 exponential and simple, and basically, you know, we went sideways, but overall, this was fairly bearish or consolidation period, and then we finally put in a lower high right here. This was telling us there was clearly something wrong in the economy for 2 or 3 years before suddenly, oh my gosh, CVD, oh, the Rona, oh my God, everything was great. Well, the transportation sector says no. It says, I don't think so, bro. You know, and then obviously we saw massive, well, the first sign that told us something was up here is this gap. Okay, this was in February of 2020. Before there should have been any reason for people to be scared or whatever. We saw a pretty massive gap down here, you know, on this sector, obviously. And then we saw just steady continuation. So obviously that told us something was going on here slightly before most other things did. Now, if we look at the weekly here, though, what did the weekly? Well, if we were looking at a weekly time frame, this was telling us basically that we should be bearish from May of 2015. This was basically in a bear trend from May of 2015 until March of 2016. And then we start seeing continuation back to the upside. We bounce to 200 exponential and simple. And then here we see that consolidation downtrend, barely hang on to the 200 exponential and simple. This to me is bearish. We don't want to see less and less of a rally each time we touch the 200 exponential and simple, because eventually, if we beat our head against the door too many times, eventually we're going to break through. And that's what this is to me. So again, this was telling us very clearly ahead of time something was wrong. And then obviously the breakdown in February, was not a surprise. So now here at the top of this trend, we top out, we come back down, and we're looking at losing the weekly 821 cross back to the downside. Every other time that's happened in the recent history, here it happened, we came down to 200 exponential and simple. Here it happened, came down to 200 exponential and simple. 200 exponential and simple. Here, we obviously massively broke through it. So if now, after that massive run up, we see something like that taking place, we're talking about a substantial move if we do what we've done every other time. We're talking about a 23% move in transportation back to retest those levels, roughly. So, and again, we're seeing some bearishness, left the bullish control zone. We did get a buy signal from the neutral zone right here. But again, this looks like this is likely to fail. And keep in mind, this is while prices for trucking, for shipping containers, for a lot of other transportation is at all-time highs. So if there's two main factors in any sector, there's supply and demand and there's prices. Those two things can determine direction very easily, or price very easily. If prices are at an all-time high and we're going sideways, so shipping containers are just going up, trucking costs are just going up, train freight, all kinds of it costs more to move products right now than it's ever cost before. Things are at ridiculous highs, and somehow price is lower than the all-time highs. We're seeing a divergence. So what does that mean? Well, it means there's probably less demand, but the higher prices are making it stay at that level. So if all of a sudden we see a spike down in demand, or we see prices drop because, basically the ability to provide that service catches up, we get more truck drivers, or we get more trains on the road, or we get more shipping containers, or we get more boats to move the shipping containers, or we get more planes to fly the goods, whatever the situation is. If we see one of those things with a downward pressure when the other one already has a downward pressure, we're going to see this thing just massively sell off. So what does that say? If demand drops off, so say after Christmas time, we would expect some demand going into the holidays, etc. But, assuming around December, whatever, January, typically cyclically, we'll see weakness. That would tell us that this is likely when we're going to get a big move down like that. And then obviously too, that maybe the prices catch up by then because people lower their prices to say, competitive, or demand falls off a cliff because prices are too high, or because seasonal, etc. That's going to tell us this could chop sideways for a little bit. But I would say probably around January, we're going to be back down here retesting these previous couple highs, and then also the 200 exponential and simple. So again, that's looking out kind of far, etc. But those are the areas we're looking for. And then that's also going to correspond with our break of the channel that we've been operating inside of. Once we broke down from that channel, that's our measure move back to that key level right there. And then obviously we have the 236, and that is our 382 Fibonacci from the bottom to the top, assuming this sector has topped out. So those are the two areas I'm looking to buy based on a lot of different confluence levels. And then if we look at on our macro weekly chart here, this is our run from, basically when we capitulated in 2011 down to a low, and then we operated inside of a channel from 2011 until we broke down in 2015. When did we see this top out? Right around basically, we hit a top around December right here. We put in a slightly higher high here in March, and then we saw basically a long drawn out sell-off here. And what did that sell-off take us to? Well, from the high to the low, it was roughly about a year, roughly, and 35%. And then at that point in time, we bounced the 200 exponential and simple on the weekly. And then we did the same thing again. We operated inside of a channel. We moved back to the upside. And then here we topped out basically in January of 2018. So this is January of, roughly December to March. So roughly, let's say January 2015. This is roughly January 2018, December to January 2018. And then obviously at that point in time, we break down from this level and we see the initial move from the high to the low down here off of the 200 exponential and simple, 26% sell off. And then we can't get back above that high right here. And then we actually see this dump take place roughly this high right here in January of 2020. And now here we are potentially doing the same thing again, breaking down from a channel, going sideways. So here we went sideways for a little while, retested the bottom of the channel, but could not put in a new all-time high. Here we basically top out, but still inside the channel, put in a new high and then break down from it. So what is the likelihood that, basically this was our top in like May, and then we continue kind of floating sideways, possibly even push up here around December, put in a new all-time high, and then January start to see that dump down? Seems very likely to me based on like the cyclical nature of this, that like January 2022 or something like that, that we would be potentially in the process of a big dump. So that to me it's notable enough worth paying attention to, that each time we broke down from one of these channels, each time we roughly topped out cyclically around like a January type time frame, and each time we retested the 200 exponential and simple, or blew through it obviously in this situation when everything came to a stop. So I'm expecting a move like that somewhere around the end of the year, which would correspond with basically my idea that we're probably going to see some sort of like macro, at least temporary top on these markets around that time. So and then jets, obviously. Let's just look at these ones a little quicker. We'll see because this stream is going to go so long. I'm an hour and 30 on just traditional assets right now. Just on this. But again, we're coming up on basically, the end of the week, halfway through the month only, but potentially the end of a quarter. So if anyone's looking to rebalance or potentially looking at more of like the macro view of things, I think this is a very important time to be paying attention. So here we have obviously our massive capitulation dump, and now here we are back below the 200 exponential and simple, and they've rolled over to the downside. This looks very bearish to me. I expect continuation, even though we're seeing a little bit of strength. That's good enough. Hail basically just hanging on to the 200 exponential, 200 simple above it, seeing some definite weakness. This got a little more like rental cars in it, etc. Weak for sure, as opposed to jets is more like planes and transport. UPS obviously very weak, and it looks like we're going to leave behind this gap at least for now. I'm still potentially expecting a bounce off the 200 exponential, and then this would correspond again with basically a rally off of the 200 exponential and simple, off of the support area down here, and then basically like a price rally coming into like the end of the year, holiday, Thanksgiving, Christmas, all the extra shipping that's going to take place. Now, is that extra demand? Is it them just raising prices? Is it a combination of the two that lets us come back up here and fill the gap? Either way, it's probably going to be somewhere around a 10 to 15%, clockwork move. So definitely paying attention to that on UPS. And then FedEx did not leave as big of a gap, but another gap here left behind, and then this one is showing extreme weakness. It broke down powerfully below the 200 exponential and simple. They have both rolled over, and this is like basically a macro megaphone, going back to essentially a top from 2014. I don't want to see this thing come all the way down to the bottom or even the heart line, but if it does, we're talking about a potential, top. If we put in a new high, we're talking about a move back to like 327. If we just retouch the heart line, we're talking about 179. If we come down here to the lows, we're talking about $100. That is probably a very, very bad situation. I'm not sure why FedEx's chart is so terrible, but apparently people don't like it. Okay, so let's look at our... actually, I'm going to jump into chat, and then we're going to do U.S. oil. I'm going to make fun of Queen Kathy for a little bit, and then we can go into our crypto and commodities. So, Manny, message retracted ×3. So apparently he hates me now. I took too long to talk to him. Sorry, Manny. Aldrich Kin says, where can I find this moving average indicator? Aldrich, the moving average indicator is the TJD Master, and it is actually something that is like encompasses my trading strategy and is only available to group members. I have a private Discord group. If you didn't want to be part of the Discord group, that's fine. You could technically just pay to be in it for a month and then have you get access to the indicator permanently. It's $100 a month, $80 after you're in the group to stay as long as you want, but the indicator is yours forever. So essentially you could just buy it for $100 if you didn't want to be part of the group. If you did want to be part of the group, that's fine as well. But it is private. It's something, maybe I'll release it eventually for free. But right now it's just one of the perks that I offer to the group members. So it is not available currently, unfortunately, to the public. Okay, so let's talk about oil and Cathie Wood and what's going on here. So obviously oil looking strong, got the perfect bounce off the 200 exponential and support as expected. Back up here, getting ready to retest the highs, back at 72 as expected. Perfect bounce off the 200 exponential and support. I just want to talk about Cathie Wood's macro and how this woman is like absolutely delusional, and I'm too pessimistic to jump back in on 42,000. Oh, no, Bitcoin you're talking about? Or Dow. I mean, it could be either one. Let's take a look at oil here. So, okay, I want to read a tweet from Cathie. Obviously, her macro is that everything's going to go clean energy. Everything's going to go EV. Oil is no longer useful, blah, blah, blah. So this purple line right here is Cathie Wood's tweet from July 15th, 2020. And she tweeted out ARK Invest. She tweeted from ARK Invest. ARK Invest believes that the oil price peaked at more than $135 per barrel in 2008, which I don't disagree with, and has been hitting lower highs and lower lows as demand growth has disappointed expectations for the last 12 years. Don't necessarily disagree with that. It probably did, or technically at this point in time has peaked. But then she followed up on her own personal Twitter account in response to ARK Invest's tweet and said, oil demand probably hit a secular peak last year, and thanks to EVs now is in secular decline. Though ARK has no formal forecast, I believe oil prices are on their way back to $12, the level reached after 1973 oil cartel crisis, or lower, now that EVs are taking off. And by or lower, she later came out and said that she expects oil to head back down from somewhere in between $3 to $12 per barrel. So that was right here after, obviously, like she said, and again, I totally agree, secular decline, sure, definitely, probably never will see new all-time highs on oil. Totally agree. But this is when she tweeted it right here, this purple line. Since then, oil went back on top of the 200 exponential and simple moving average and has been melting up to the upside, came down and retested the 200 exponential and simple, and looks more than likely like it's headed back to new highs, at least temporarily. So from when she sent out her tweet, oil is up roughly 80%. So 80% up. And obviously we see that she said that it had reached its high last year. She expected this was the high back here. We actually retested or took out that high on our little push up here in July of 2020. So we're more than likely going to be pushing through that high, in my opinion. So let's look at the macro chart and see what we're paying attention to here. So here we have our macro chart. This is the high that ARK Invest was talking about. I totally agree. We will probably never see that high again. But if we look at the Fibonacci, based on that being our all-time high and essentially like the previous low being back here in May of 1986, which was around $8.68 or $9. That's our low to our high. We've sold off to the 786, on that massive capitulation dump down here. We came back up. This is trading very technically is what I'm getting at. Came back up perfectly to the 236, retested it here in 2011, basically retested it here in 2013, failed to break above it, and then we came down to the 886 perfectly. So we came all the way to the top. We broke down to the 786. We came back to the 236. We broke down perfectly to the 886 for our low here in 2016, after which we pushed back to the upside and came up almost perfectly to the 0.5. Are you guys sensing a pattern here? Probably. That was in September of 2018, and the peak she was talking about, at which point in time we sold back off, arguably took out the low of all time as oil went to $0 a barrel, whatever. There's obviously some macro factors there. So again, we say it went down to the low or to the zero or whatever, at which point in time we broke back to the upside and then we came back up to the 0.5. So in my opinion, what are we looking at right now? Well, on the macro, we're looking at a bottoming pattern right here. So we're back on top of the 200 exponential and the slope is flipped over blue. We're back on top of the 200 simple on the monthly and the slope has flipped over blue. So I don't know if you want to call this just a double bottom or, what situation. What am I looking for? The round, yeah. Depending on what you want to call it, I'm looking at it as, basically something like this. Damn it. I'm looking at it as something like this, roughly. We basically have something like a Eve situation right here on oil. I'm going to make this bright so hopefully you guys can see it pretty good. We have basically a rounding bottom taking place, and then I'm looking at this as a atom situation. And again, this is like what we were talking about earlier, how there's two ways a market can bottom or top. Okay? So in my opinion, this is an Eve. This is a rounding bottom. This is an atom. It's like a very sharp or V-shaped recovery. You can have the same situation in a top. This is an atom, type top or a blow-off top. And then this is more of like, an Eve rounding top type situation. Obviously, they don't have to hit the exact same line, but if they do, it's much more reliable. But to me, this looks like an Adam and Eve bottom right here. So we're back here retesting the heart line or the neckline of the Adam and Eve or resistance of the Adam and Eve. So if we break through this, we would expect our move to be from the bottom of the pattern to basically the neckline. So if you want to do aggressive, you could do the full Adam. If you want to do conservative, you could do just the Eve. It's like slightly smaller. But that's what I'm paying attention to. So if we do break through this, as I'm expecting, based on oil prices and what's taking place right now and the macro being back above the 200 exponential and simple, I'm expecting us to move from somewhere around like the mid 70s where we are now up to 118. Well, if we pay attention once again, what is that going to take us back to? It's going to take us back to the 236. So it would not be unrealistic for me to think that oil, obviously my target is $95 a barrel for oil, 95, call it 100, just because I expect $100 oil. But realistically, I think based on the Fibonacci's, based on the way this has been technically trading and how accurate it has been, I really think that we're going to come back up here and retest this area right here. I think that's our target. So what I'm trying to illustrate as a point right now is obviously oil is trading very, very technically. It's very much like following these Fibonacci's. And, if it's a little tough to see because of the moving averages, well, you can see it's very clearly perfectly touching these Fibonacci lines for support and resistance, in many, many places on this monthly time frame. So if we break through here, our next target is going to be that $94 range. After that, it's going to be $114. So if we just do a, basically from where we're at now, just to get a rough idea of what we're expecting, another like roughly 58% to the upside in oil, and obviously like 18 to 19%. If we start to break down below the 618 and don't hold it as support, I would assume that we're going to break back down and retest the lows, at which point in time maybe we come back down, it's an inverted Adam and Eve, maybe we come back down to $12 a barrel and Kathy's right, or $3, or maybe oil goes to zero because we don't need it anymore because we have cold fusion. I don't know, whatever, any of those situations could happen. But right now, this chart looks very likely to me that it's going to go up to here. So my point is that from when Kathy put out her tweet about oil going to $12 a barrel, if we hit my target, oil will be up roughly 177% in that time period, but it's up now roughly like 80% or something like that. So, and obviously we have momentum in our favor. Everything looks bullish here. Everything looks bullish here. Bulls are clearly in control. And then if we flip back on our moving averages as well, we will see on the monthly, we are above the 200 exponential, we are above the 200 simple, and we have the 8 and 21 cross to the upside. So everything that we use to determine trend tells us on the monthly scale that we're in a bullish uptrend. Now, if we go to the weekly, is it possible that, we immediately break through this? Definitely is. We're above 200 exponential. We are above the 821. We saved the trend right here. We're at resistance. We have momentum in our favor. We're potentially developing bearish divergence. Does not mean we don't push up first to $100 and then see a big sell back off, and then we have to see where that comes up. So we definitely have a couple drives of bearish divergence, but typically the third drive will be some ridiculous unsustainable level. So that's probably going to be our pushback up to $100. And then if we go to our daily time frame, we bounced perfectly off of the 200 exponential and simple as expected, obviously. And again, you see Kathy's tweet was off of resistance at the 200 exponential and simple. Not unrealistic, but at no point in time has she revised her situation. And then even after we were back on top of the 200 exponential and simple, she was doing interviews in late 2020, early 2021, saying she expected oil to go to $3 to $12 per barrel. So oil did pretty good, obviously, since then. And, let's compare that now. Let's compare that now to how Kathy has been doing since then. So, and my point being in this, that we have to be careful that she's not just been successful and pitching a narrative. And because she is making 0.75% or 0.75% on whatever, $75 billion in her actively managed ETF, so she's making 0.75% of 75 billion. So let's just call it, round it off, and let's just say she's making roughly $500 million to actively manage the ARK funds. So it's in probably her best interest to get as much money into these funds for as long as possible and just skim it off the top, okay? So if she has roughly, I think she said recently, I could have looked myself, but I thought it was closer to $100 billion, but maybe it's 75 billion like she said. Maybe it was an old interview, I don't know. But roughly, let's just kind of look at where ARK is at right now. So this is ARKK, okay? This is her big fund. It's at 117.75, and let's look back to that. So December 2020, December 4th of 2020, that's where her fund is at. So literally the biggest bull market of all time, the most massive run-up of all time, the S&P, Dow Jones, basically you can throw a dart at a dartboard and you're up somewhere between 20 to 100%. Oil is up, 75% plus, and she has done absolutely nothing. Her ARKK active managed fund is still at December 2020 prices. So you're coming up on, at this point in time, we're halfway through the 9th month of the year. You're almost 3 quarters in, and you have made no one any money in your actively managed, 75 to $100 billion. While you skim off the top $500 million to $1 billion. So, and remember what I was saying too about ARK topping out back here and saying that, she got in on some stuff and now she's probably going to underperform for the next 1 to 5 years. Well, so far it's playing out perfectly. So, and then if we look back at the time frame and when she made her tweet, this was her tweet about oil. Obviously her fund was going absolutely parabolic then. It was much smaller at the time, but this is when she put out her tweet on oil. So if we go from that point right there to the top of her fund right there, she was up 100%. So ARK doubled from that point in time. Congratulations, Kathy. You did well. But if we go to current price action right now, she's up 51%. So if you literally paid oil nothing because you can just invest in oil and not pay her fee, or if you just went into, an ETF or actively managed ETF or whatever, oil has done better over that period of time than she has. And it looks like it's getting ready to go absolutely parabolic. So And then if we start looking at the actual technical analysis on ARK and my targets, well, let's pay attention to it over here. We're basically barely hanging on to the 200 exponential. The 200 simple has crossed above it. We tried to break back out to the upside. We've put in a series of lower highs and could not break through our clear resistance here. We're barely hanging on to the 200 exponential. Each time we have bounced the 200 exponential, we have seen a weaker bounce, including a invalidation break. It looks like this thing is getting ready to just fall off a cliff. So now if we look at Fibonacci's on old Kathy's ARK fund and see how she's been doing based on our Fibonacci's. Well, if we go from the bottom down here in March 2020, obviously the crash, to the top right here, put our Fibonacci's in place, the initial sell-off took us down perfectly to, let me make this a little brighter so you guys can see. This came down perfectly to the 236, telling us based on this trend right here that the Fibonacci level was confirming that ARK had in fact topped out. We hit the 236, we hit the 236, we broke down from the 236, came back up and put in a lower high, took profits on a little scalp trade right there. It underperformed the potential breakout of the channel. And now what does it look like it's doing now? It looks like it's getting ready to come back down to the macro 236 in green here once again, at which point in time I would expect it to break down to a lower low, at which point in time the 382 would be our next target. That would take us down to $87 or potentially 50% Fibonacci retracement back down here to like $72. So if ARK's roughly at $75 billion right now and her fund sells off from this point and hits the 382 target, that is 25% gone. So if we're saying she has 75 billion to 100 billion in her ARK funds, and all the charts for all the funds look exactly the same, basically, give or take a couple percent. You know, we're basically looking at Kathy losing roughly somewhere around a quarter of $75 billion. So roughly around like 17 to, if she has $1 billion total, or just 75 billion versus 100 billion, we're looking at Kathy losing roughly somewhere between 18 and 25 billion dollars if we hit my next target right here while oil goes parabolic. Or if she all of a sudden sees a big capitulation move in her funds and we see that 37% sell-off, we're looking at a $25 billion loss on the short end to somewhere around $37 billion loss. So that's what I'm expecting. That's what I'm expecting from Kathy in the near future. I'm expecting her narrative to play out in the opposite direction. I think she's right in the long term about genomics and, you know, EVs and clean energy and all this stuff. But I think her timing is way, way off. She took advantage, in my opinion, of a parabolic bubble, you know, and the most bullish run ever, but she's telling everyone this is definitely not a bubble. She's still pitching this ridiculous narrative that has been invalidated. If she actually was using technical analysis and paying people millions of dollars to do all this research and had any idea what she was talking about, one, she wouldn't be underperforming literally anything in the market for the last year, and two, she would have admitted a while ago that she was wrong about oil on the short term, that oil was going to continue higher, and then eventually maybe it was going to go back down to $12 sometime in 5 years or 10 years or 25 years or 100 years, whatever her time frame was. But instead, she has literally just stuck to her guns while oil has outperformed any of her ARK funds, and it looks like realistically she's probably going to see a massive sell-off. And if you say to me, you're just a hater, ARK funds outperforming everybody, she's amazing, Queen Kathy is the best. Well, let's look back at ARK fund and see what happened from its inception here in 2014 to when it took out its high and started back into a bull run. We saw ARK initially in 2014 October to the low back here in February of 2016. So for roughly, like, let's say a little over 2 years, it lost 28% of its value, and then eventually took out the high after 825 days. So it went sideways to down for 3 years. Okay. And then after that, it did phenomenal. Great job, Kathy. You crushed it. You basically went into another bull run. You did 123%. Congratulations. You outperformed the market, I'm sure. And that was over a 575-day period. So 1.5 years. At which point in time, once again, it topped out in August of 2018. At which point in time, from the top, to the bottom right here, the CVD dump, whatever. It lost 33% of its value, and it went sideways for roughly 579 days. Oh, that's weird. Another year and a half basically sideways and 33% down, at which point in time it finally took out the previous high right here and went into the run that we previously discussed, which was obviously what she got famous off of. So she basically did 195% to the upside. Great job, Kathy. Obviously, like doubling people's money that got in off of that move. You know, and that took roughly 336 days, so roughly 1 year to the upside. So what am I expecting here? Probably her to underperform for roughly, you know, what, 600 days or something like that. She's probably going to underperform, what, 3 years, 825 days right here from top to breakout right here, you know, 639 days right here. So probably for like the next 2 years. And then obviously from when we topped out to right now, it's already been like 9 months, 212 days. So how long does it take her to basically get back to break even from the all-time highs and continue to the upside? Well, probably 600 or so days or something like that. So that's my opinion on Kathy. That's a legitimate look at how she's done over time. You know, obviously she caught a lot of attention and everything, but when we look at, you know, if you look at from basically her fund's inception to its all-time high, she's up 670%. That's obviously good from 2014 to 2020. Well, technically 2021. So, you know, roughly, well, I guess, no, that's the end of 2020. So roughly we're looking at basically, you know, a what, 6.5, 7 year period, 670%. That's obviously very, very good, you know, over that time period. But let's just remember that the majority of that was from this run right here. So, and that was assuming you got in at like fund inception at $20. So I just think that people need to be very, very careful, because no matter what happens with ARK, Kathy is going to stick to her guns. She's going to continue to just pitch over and over again EVs and Tesla and cryptocurrency and oil's going to die and autonomous taxis and genomics and this, that, and the other. And just keep in mind, she has literally made no one any money this whole year. For over 9 months, 9.5 months this year, she has made no one any money. And if you look at the size of her fund going up to the top here, you know, it was like a couple $1 billion here, and now it's 75 billion. So, or 100, depending on, I should have looked that up, honestly. But, you know, roughly, you know, it's tripled, quadrupled in size or whatever from when this run up was, and all she's done is lose people money or made them miss out on a bull run. And she probably is going to lose another like 18 to $35 billion. And while that takes place, she's going to skim off the top of that fund roughly, you know, what, 750 million to 1 billion. So she's going to become a billionaire roughly while everybody else loses money. So probably worth paying attention to, because, you know, she comes out here and just sticks to her guns and everything, but she doesn't admit when she's wrong about stuff or when her time frame is not going to work out. So if I was going to lose people money and I was going to skim roughly 0.75% off of $100 billion fund, so I was going to make, you know, a nice chunk of change, you know, roughly $1 billion, let's say, over a year period for myself or for my fund or whatever, you know, I would be like, oh, no, I got a 5-year time horizon. So, because by then you'll have made like what, $5 billion. So you're like, it looks like I was wrong. Sorry, guys. My fund actually underperformed everything and completely crashed. And I did lose billions and billions of dollars for you guys. But I did make $5 billion myself, actively managing your fund. So, but anyway, that's my Kathy Wood hate. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. But understand that just because someone had good results in the past does not mean they're going to have good results in the future. It's very important that you look at various times throughout a fund or a fund manager's career and see how they did. Because if you were the person that bought into the fund and it lost 30% or went sideways for 3 years and lost nothing, that sucks pretty bad. If you were the person that, bought in during the euphoria Obviously I called the top almost perfectly based on the 821 cross on the daily. That worked out absolutely phenomenally. I called the top on her fund basically back here, and it's now down, what? I mean, we can just look. It's down substantially since then and never even came back to fill the gap. So it's already down 20%, from when it sold off. And if I'm correct and it sells off massively still, it's going to be much, much worse. So just be careful. Look at people that have done phenomenally well over 20 years or 25 years or whatever. She was talking a bunch of trash about Michael Burry. I understand Michael Burry is one of those people that has called like 10 out of the last like 5 market tops or so Sprott says. I get it. He's always bearish or whatever, but he has a proven track record and has made a lot of people, including himself, a lot of money. And if you look at his fund over time, it has exponentially outperformed Cathie Wood's fund. So for him to short her fund, he must be seeing something that I'm seeing also. But more importantly, if you look at their 2 track records and put them side by side, it's not even close. It's not even close. So for her to come out and say he just doesn't understand it, Michael Burry, you just don't understand it. You did well during the housing crash, but you just don't understand the future and you don't get it. That's what people that are idiots say. Because if you're actually smart and someone doesn't understand something, you explain to them and make them understand. And then they say, oh shit, you're right, actually. But if you just come out on a bunch of interviews and say, you just don't understand, and you run a marketing campaign for yourself and your fund while you've literally made no one any money for the last 9 months, you're probably as close to a fraud as possible. Or maybe you just bought into you drank your own Kool-Aid and you joined your own cult. And that's fine. You can be the cult leader and also be in the cult. But just make sure at the end you don't end up with $5 billion and everybody else doesn't end up broke. So, because that's what I think is going to happen. Hey, what's up from South Africa, man? That's what's up. Hell yeah. 3:42 a.m. Oh, I understand if you go to sleep, my dude. Don't worry. I always post these later on, so you can always watch them later on. And I try to make them last until my next stream. So every Wednesday night and Sunday night I do a live stream, and then I do like some excerpts or videos in between. So let's take a look at the dollar. Clear my throat. Sorry if I did that in the mic. I tried to mute it ahead of time. DXY. You guys know how I feel about the DXY. Again, we are back on top of the 200 exponential and simple. The 200 exponential and simple have rolled over to the upside. They both have a positive slope. And while we are in a temporary little micro downtrend, we have a low back here. We have a higher low here. We have a higher low here. And then obviously the macro low here. So looks to me like everything is bullish on this. We're clearly above both moving averages, 200 and simple 200, and trending to the upside. So while we're seeing some temporary bearish divergence play out, I do expect this to continue to the upside. I do expect the dollar to gain strength over time. And again, if we just turn on our drawing tools real quick here and pay attention to what's taking place, we have 2 very clear patterns taking place. We have an inverted head and shoulders with a slight descending neckline, or alternatively we have a rounding bottom or an Eve bottom right here, and then a pointy bottom or an atom bottom right here for a double bottom pattern. Either way, depending on how you look at it, we have a measured move somewhere if we break through the neckline here in white, or technically if you look at the descending inverted head and shoulders, we have already broken through the neckline and we're just consolidating on top of it. But either way, our measured move is going to take us roughly somewhere between 96.5 to 98. Also, obviously, we were operating inside of this little ascending wedge, broke down from it, found support at the bottom of this ascending broadening wedge, and now we're potentially coming down here to retest that in the neckline, at which point in time I would expect us to move back up towards the top of the range. But as far as I'm concerned, we're just range trading, consolidating, but very bullish on the daily. Very bullish. And then if we look at the weekly, we will see this is a macro support line / resistance line that we've been paying attention to, and that's why we're having difficulty breaking through it. But I do expect over time that we will break through it. We'll notice here on the weekly that we were in a long uptrend here, saved the uptrend here and then lost the uptrend here, and that a break back to the upside would be the retest of the 200 exponential and simple, which we are below currently. But we'll notice also that we're seeing a bottoming pattern play out, as here we have a double bottom. Here we have crossed 821 back to the upside on the weekly. Here we have triple bullish divergence from this point, and this point, a same high. Same lows, and this was obviously a higher low. We have a lower low, we have a higher low, we have a higher low, we have a low, we have a roughly same low here, and then a higher low here. So we have the two different types, hidden and regular bullish divergence playing out. 3 drives of it, followed by the move back up, and then we took out basically this little previous peak from the initial move. So as far as I'm concerned, while we are still below the 200 exponential and simple, I'm still bullish on this for a retest back up to roughly 94 to 94.8 or 95. So again, that's going to be part of the measure move, but not the completed measure move. And then finally, if we just switch out to the monthly time frame, here on the monthly, we will see this chart goes back till 1985. We are very clearly in a downtrend on the dollar. We have an initial peak back here. We have a lower high here, and then we have a series of lower highs here as well. We have a low right here in 92. We have a low again in 2008. And now what we're paying attention to is, very clearly over time this is going down, but we have an internal retracement from this point all the way almost back up to the previous high. And I say internal retracement because we have a high and a low, and then we move almost back up, and then finally we break out of the internal retracement. We take out the low. Alternatively, we could have broken into the upside and took out the high. But again, we're in a downtrend now since then. When we took out the low right here, we're now in an internal retracement of that low. So we have a low, and then as long as we're below this high here, it's still technically internal. But for the first time on this chart, because it takes so long for our monthly 200 exponential and simple to populate, we took out the 200 exponential back here in October of 2014. We moved on top of it, came back down and retested the 200 exponential and simple in 2018, but still had a negative slope on the 200 simple because on a monthly it takes so long to respond. And then here we got extremely bullish on the dollar long term, but still expected a pullback, as here for the first time on this entire chart going back to the 1980s at the end of, think about this for a second too. What was going on now? At the end of December 2019, beginning of 2020, we confirmed the 200 simple and 200 exponential slope to the upside for the first time. So macro, we were bullish on the dollar for literally the first time ever. Arguably, you could say if you extended out the 200 exponential and simple, that you would have got the same signature back here in like 97. And we went for roughly a 30% move to the upside, and that lasted for 2,038 days from when this previous similar situation took place. So, or arguably, let's say you're saying, oh, well, no, the 200 would have been roughly around here. That's fine. 25% and roughly 1,186 days. So from when we confirmed this trend to the upside, we pull back to the 200 exponential and simple. But if we get roughly, 2,000 to 1 to 2,000 days of an uptrend, we're talking about an uptrend in the dollar till roughly 2024, 2025. That's not possible. Federal Reserve and inflation, and they're printing too many dollars and blah, 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 blah. Sure, fundamentally, you can argue whatever you want. But technically, the dollar is probably going to rip people's faces off. And what is that going to correspond with? Probably a massive crash in all markets. It's going to be a crash in the real estate market. It's going to be a crash in, possibly commodities, gold and silver, etc. Probably a massive capitulation event in cryptocurrency and the stock market. Probably a crash of a bunch of other currencies around the world. And you say, but the dollar's garbage, da da da. Well, it's still the world reserve currency. So at some point in time, if you owe a debt to someone, if you have an IOU that's, in anything. Say you have an IOU to your buddy in Mentos. I owe you 1 pack of Mentos. And you're like, okay, and if anybody doesn't know, they're like those candies. But you could say anything. Tic Tacs, whatever. I owe you a box of Tic Tacs. Okay, cool. And then finally I come to you one day and I say, okay, here's your box of Tic Tacs. I would like to settle that debt. You're like, okay, great. Now we're even because you owed me a box of Tic Tacs or whatever, package of Tic Tacs or, a Pez dispenser or a pack of Mentos or whatever currency you're using for your deal, for your IOU. If I come back to you later on though, and I say, here's $1, and you owe me a pack of Tic Tacs. You don't owe me $1. I could say, no, I don't want it. I want the $1 or I want the Tic Tacs that you owe me. And then you go to the store and you say, well, Tic Tacs are only $1. And then you go to the store to buy some, and now Tic Tacs are $5. Well, you actually owe me $5 then, because our debt was denominated in Tic Tacs. So the world reserve currency has debt all over the world in dollars. The entire world has debt denominated in dollars. A bunch of the mortgage securities or mortgages that were recently sold or that were recently defaulted on, or the Treasury for Evergreen, the Chinese real estate company that just blew up, were denominated in dollars. So in order to settle those, in order to pay off that debt, you have to first acquire dollars and then pay it off the same way you would have to acquire a pack of Tic Tacs. So if you owe me a pack of Tic Tacs and then suddenly there's a shortage of Tic Tacs all around the world and Tic Tacs start going up extremely fast, and then all of a sudden a pack of Tic Tacs is $100 and you say, oh, here's $5. That's how much Tic Tacs were when we made the deal, or $1. That's how much they were when we made the deal. I could say, no, you owe me $100 because you owe me a pack of Tic Tacs. And that's what our debt was denominated in. So that's the same way with dollars. So if all of a sudden this dollar starts to blow up and go to the upside, and then everybody FOMOs in, there's basically a short squeeze on the dollar because everybody who has dollar debt denominated in dollars needs to rush and get these dollars. That would lead to basically a short squeeze, an AMC pump, a GameStop type pump in the dollar. Does that mean that the dollar is amazing and great and everybody wants it? Well, no, we know for sure from what's happened with AMC and GameStop that horrible, terrible, shitty things can go massively parabolic to the upside. So that's your example of a dollar short squeeze, the same way that some piece of shit company that's basically bankrupt, like AMC or GameStop, can have a squeeze that goes up absolutely parabolic. We could literally see the dollar do the same thing. Well, yeah, but that's different because the AMC and the GME, that was a short squeeze and their companies, and okay. It doesn't matter. If people all of a sudden want something and there's a big short interest on it, or there's a limited supply of it, whether it's AMC stock, whether it's GameStop, whether it's the dollar, if all of a sudden everybody needs it and it starts to go parabolic, it's going to create excess demand for that. And that is how the dollar goes absolutely parabolic and wrecks everyone's faces. So if all of a sudden everybody's so sure the dollar's going to zero and hyperinflation and buy your gold and buy your real estate and buy this and foreign debt and this, that, and the other, if all of a sudden the dollar just goes absolutely parabolic, it's going to wreck anyone that's leveraged. It's going to wreck anyone that doesn't have dollars. So maybe I'm wrong. Maybe I don't know anything. Maybe you don't agree with me. But maybe if we look at the technicals of this chart and we actually use our brains that the dollar is the world reserve currency, maybe I'm right and the whole world is wrong. And all of a sudden, one day in the next couple of years, we're going to see some crazy shit happen. And if you listen to me even a little bit, which this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. But if I'm right, you might just be rich. I know I will be. But the truth is, the narrative right now is, and the Federal Reserve and the government have pushed this narrative. Think about it. The whole economy and everything went into a massive deflationary spiral. Everything was crashing. It was all closed. All stocks were selling off. Crypto was dumping. Everything was just capitulating. Okay? Everything capitulating. What was the narrative that the government that can definitely be trusted and definitely would never lie to you, or the Federal Reserve, which can definitely be trusted, or any other reserve bank around the world, or the IMF that can definitely be trusted and would never lie to you? Since then, they have been pitching two things. They've been saying everything is going to cost more than it does now in the future because of inflation. And then they've also been pitching, well, there's some inflation, but it's not that bad. But real, like wink, wink. But in real life, they know that there's massive amount of inflation. They even say on their mission statement that they want inflation. That's their goal, is to get inflation. They've never been able to get inflation. So what they did was they basically bought mortgage-backed securities and they bought treasury bonds to force inflation to happen by dumping massive amounts of liquidity into the system. Well, what were they really doing? They really weren't even inflating anything. They were really just, trying to maintain the inflation that was already in the system. They were trying to maintain all the bubbles. They were trying to maintain prices. They were trying to stop the world from going into a giant deflationary cycle or, Great Depression. So in all reality, the narrative for the last year and a half has been there's tons of money for everyone and there's going to be tons more money in the future and everything's going to cost more money in the future and there's all this inflation because everything's always going to cost more. Well, everybody that knows how an economy works knows that if everything is going to keep costing more and more in the future, people are going to go into business in whatever that is, and eventually those things are going to level out and find like a neutral position. Now, maybe it's way higher. Maybe houses are all $1 million in the future. Sure, definitely a possibility. But eventually, if houses are $1 million and the things that you use to build the houses are less than $1 million, people are going to build more houses until eventually it's met. And we're going to see that all throughout all different markets. Things will adjust based on technology, et cetera, et cetera. So it's unrealistic to think that everything is just always going to be extremely expensive all the time forever in the future because of inflation, which the Federal Reserve wants, which the Federal Reserve has caused, because we know how supply and demand works. There's Peter Schiff says this better than anyone else in the whole world. He says, well, there's basically, his argument essentially is there's always demand for things. Everybody wants everything. All humans want everything. Do you want a Ferrari? Do you want a Lamborghini? Do you want $1 million? Do you want gold bricks? Do you want Bitcoin? Of course you do. Everyone wants everything. We all want a house and a Ferrari and all this stuff. But what stops everybody from having one? Well, supply and demand. And so if there's only so many Ferraris and the price is $250,000, only so many people are going to buy those Ferraris. So if all of a sudden everybody gets $250,000, the price of those Ferraris is going to go up because there's still only so many Ferraris. So that's what's been happening in the world recently. The prices of everything are going up because there's only so much of everything, and we're just pumping out massive amounts of money, but we're not making more of those things. So over time, even if we keep pumping out massive amounts of money, if we start going back to how the economy was before and we keep making those things, eventually prices will level out somewhere along the way. So everybody always wants everything. And in the meantime, we've been pumping up all these prices by giving everybody money. So what could stop that from happening? Well, if all of a sudden more supply comes online, that's going to meet the demand. Everybody that wants something can get it then. Or alternatively, the liquidity disappears from the system. There's not as much money to buy, so the prices come back down. So again, they level back out and all the people that want to have that thing can have it. But at some point in time, there has to be a leveling out of things. Things are not just always going to be exponentially more expensive like how they have been overall. So what we did basically was we curbed supply for, a year and 8 months, a few months on some things, and then open back up. And then we kept demand at the same level by giving everybody a bunch of money. In many cases, we increased demand by giving people more money than they would have had, or letting them stop pay their bills and then giving them more or the same amount of money they would have had. So we increased demand and we decreased supply. So that's why prices have gone up crazy. But in the future, let's say you got a bunch of free money and you didn't have to pay your rent or your student loans or anything, so you bought a new car. Well, great. So next year, are you going to buy a new car, or the year after that, or the year after that, or the year after that? Probably not. So what really happened? What really happened was we pulled forward demand from the future. Okay, so only so many people are going to buy a house in the next couple of years. Only so many people are going to buy a car in the next couple of years. Only so many people are going to buy so much bleach or clean wipes or whatever in the future. People stocked up on all types of things, or bought things that they were expecting one day to buy, or bought things that they thought they were going to need or whatever. So slowly over time, as things start to normalize, in the future, we're going to see that deflation kick back in, because we've always been in deflation. The Federal Reserve and other banks have not been able to hit their 2% inflation targets by their metrics. You could argue they have hit it every year, but by their metrics, they've not been able to hit that 2% target for decades. So why are they all of a sudden going to be able to hit it? They're not. Things are going to go back to somewhat normal. Does that mean prices are going to go back to where they were on everything before? No. But the fact of the matter is, we have pulled forward a bunch of demand, and eventually in the future, supply is going to come back online, and we're going to have more supply because prices on everything are so high. Everybody's going to want to make and sell everything. And then we're going to have less demand because we pulled forward a bunch of demand by giving people a bunch of money. So if we all of a sudden have more supply and less demand, arguably, we're going to have more deflation, or arguably, my macro view is we'll have stagflation. Things like food, necessities, stuff like that will be more expensive. And then things like, bicycles and cars and, junk that people don't need that they just spent, like, consumer discretionary type items or whatever, are going to deflate, including things like real estate, possibly things like cryptocurrencies or stocks or whatever. But if you look at the actual stock market and then you start looking at prices based on like the actual valuations, and we'll get back into technical analysis shortly. I just wanted to talk about this today. If you start looking at actual valuations and stuff like that, well, things are priced at record high valuations right now. A lot of things are priced based on, typical like valuations, which are like price to earnings, but some things are based on price to sales because they don't even have earnings. So if we're at record high, price to sales or price to earnings, and then in the future, we're going to have less demand or more supply online, most companies are going to make less money. And then if we also start raising taxes to pay for all the free stuff and all the socialist programs that we're doing now, then, companies are going to make less money percentage wise. So their margins are going to be worse. There's going to be less demand, and we're at record high, valuations or, multiple expansion, quote unquote. So the likelihood is that everyone has been telling us, everyone has been acting like everything's going to be more expensive in the future, and there's going to be all this inflation, and if you want something, you better buy it now. But in all actuality, what we really did was we just propped up the economy because we were afraid that things were going to cost so much we wouldn't be able to purchase them in the future. But in the future, actually, things are probably going to be way, way cheaper because there's going to be almost no demand. It's like they say, the best cure for higher prices is higher prices, because eventually you're going to kill demand because the prices are too high. So in my opinion, we're getting ready to go into a massive stagflationary period, and we're probably going to go into a depression. And when you look at, honestly, technology is deflationary, but that's a good thing. Back in the day, again, Peter Schiff says it perfectly. Back in the day, when a car first came out, no one could afford a car. It was only for a couple of people. Same with the cell phone. When a cell phone first came out, cell phones were extremely expensive. Most people couldn't afford them. But over time, they became cheaper, and then market went up because there was way more people that could afford a cell phone when it was $1,000 or free from a service provider than when it was a couple $1,000. So over time, technology is naturally deflationary. So if we have that factor for deflationary, then we've already pulled forward a bunch of demand, so that's deflationary. Plus, we're going to put a bunch more supply online because prices are so much higher on everything. So now everybody's going to make more stuff, assuming they can sell it. And then on top of that, we have, I don't want to say a decline in population, but we have a decline in the speed of population growth. So we're more people, but we're making those more people at a slower rate. Who's going to pay for everything? Because again, that's going to end up being deflationary or disinflationary. We'll still have a population that grows, but it will grow at a slower and slower pace. And if you start looking at the population statistics, you'll notice that, during like the roaring 20s and the late 1900s or early 1900s rather, that you were seeing population pick up massively. And then during a, recession or depressionary period, you see population growth start falling off a cliff. And then again, we're starting to see that same trend happen. We saw a big boom going up towards the 2000s, and population growth, in the United States and worldwide was going at 3% and 5%, depending where you're at, etc. And now, leading up to this recession that we went into, over the last few years, it has decreased down to like 2%, some years 1%, other years 2.5%. But we're seeing that same cycle taking place. So if we don't have more people, that's going to be naturally deflationary. Plus technology is naturally deflationary. Plus there's going to be more supply online. That's going to be, deflationary. And there's going to be less demand because we pulled forward a bunch of demand. So that's going to be deflationary. And then prices on, the stock market and people's wealth and their savings and all this stuff's going to go down. That's going to be deflationary. So, just be careful if you believe all the bullshit that we're being fed right now. So, but let's jump back into it and rip through the rest of these assets because I know this is going to go long. We're at 222 now, so let's try to finish this off in the next 40 minutes. See if it's possible. Tesla still operating underneath our resistance here. If we break above, 785, that's a big deal, but we're just operating inside this channel, barely hanging on to the 200 exponential and simple moving averages. Obviously seeing some weakness showing up on the daily. Uber, very, very weak, selling off nearly down to our target. I still expect us to get down here to our entry point for a scalp between roughly $35 and $36. Very weak, below 200 exponential and simple, both slope to the downside. This is in a very clear daily defined downtrend. Pinterest, again, very weak, had a massive gap down here, still operating inside of this descending like channel or wedge. Again, 200 exponential and simple have rolled over, very bearish. Still expecting a potential move down here slightly lower, somewhere around like $50 to like $46, looking to take a scalp to the upside. Potentially looking at this once again as the 236 holding, but very bearish overall. Wish, extremely bearish, potentially looking to put in a double bottom at the 2.618. Getting the hard sell signal at support right now, above the slope line, but it is still red. Red histograms coming in. I'm looking at this as a potential bottom. If we do take out the stop on this trade, I'm obviously just going to step aside and wait. But I definitely think there is potential for, I may add on this if we start seeing any strength come in, honestly. Just because this has some serious potential for just a strong pop, even just to fill the gap at this point in time is like 41%, or just to retest the 2.236, 25%. Definitely looking like there's some potential. Airbnb still active. We're like halfway up to this 15% target to retest the zone here. Still overall strong. Trend is still good. Vodafone still very weak. We are finding support right here again at that line. We came back down to that same support again. We are below the 200 exponential and simple, and they have rolled over to the downside. This could potentially be another in a series of higher lows, but it could also lose this area, and if it does, we could see some serious downside on this. Bumble obviously came up, got rejected once again at the blue resistance turn support, or support turn resistance rather, back down at the bottom of the ascending triangle. Looks like it's going to try to find support here and push back up. I expect this eventually, sometime in the near future, to break in one direction or the other. If it starts to consolidate and hold above 57.50, I will get bullish on it. But I think more than likely what's going to happen, even though it is a bullish pattern, I think it's going to break to the downside. Also seeing some bearish signals on our indicator oscillators. Baidu, I won't touch any of the China stuff right now for anything other than just a quick scalp or just a couple dollars at it or whatever. Everything looks terrible. Looks like it's rolling back over. The 200 is angled to the downside exponential. 200 simple is about to roll over on the daily. Looks terrible. Alibaba, same thing. We hit our target. We sold off here. We just hit a new low once again on this. Looks absolutely terrible. Almost down to the measure move at 147. 200 exponential and simple have rolled over. We lost a key ascending support line. I'm not trying to just catch a knife on this. TME, 10-cent music. Looks like it's coming back down here to retest the lows again. Hard sell. Looking very weak. Trying to put in some divergence. We had a little drive of divergence here. We had a little drive of divergence here. You could argue there's some bullish signs starting to show up. I also like this green support line that we've bounced a few times. So we'll see how this lasts. We'll see how this corresponds. But again, very weak. And the fact that we broke down from this blue support, retested it, couldn't get back above it, tells me we're probably coming back down to put in lower lows. 200 exponential and simple, both angled to the downside. Very weak. Diddy, rolling over as expected. We broke down from that support, retested as resistance, retested the support down here, got a lower high, so it looks like we're coming back down to retest the support. So looks very weak. BZ Kanzun looks good. Broke back above the blue support line here, came down, found support on it, coming back up and attempting to take out this high right here. If we do break through this, I think we're retesting the previous high, $42. Again, though, not really interested in anything as far as Chinese investments currently. JD.com, or ticker symbol JD. 200 exponential and simple were both angled to the downside, came back up and retested the 200 simple back above the 200 exponential, trying to hang on to it, but I do suspect this is going to roll over to the downside. It looks a lot to me like Bitcoin, where it saved the 200 exponential, failed to get the move back to the upside. There's still a possibility this continues to the upside and does well, but it looks more likely than not like it's going to do what these things do 75 to 90% of the time when you see the signature. NEO, same thing. 200 simple back on top of the 200 exponential. Now both of them angled to the downside and rolling over. Again, looks very similar to a topping pattern and a failure to maintain the trend. Looks very bearish. EDU, I'm done with this. We tried to basically flip the 821 back to the upside. Looks like we're just going to come back down here. I expect this to just continue putting in lower lows. I thought that maybe we could get this gap fill, but it does not look good. Does not look good. Peloton, again, did exactly what we said. Came back up, tried to save the 200 exponential and simple, broke down from it, came back up, retested it one more time. 200 simple is rolled over, 200 exponential is rolled over, and we broke down from it. This was our earnings beat, this pathetic little earnings beat by 9 cents, and it had a massive rally afterwards. And then here we see Peloton missed earnings by 61 cents or 139%, lowered prices on their bikes. And, you know, this little rally right here was because now they're going to make sweatpants and hoodies. Peloton looks like it's about to just get absolutely wrecked. Absolutely wrecked. I expect this to be down at $70 very soon. TSM, Taiwan Semiconductor, just as far as I'm concerned, operating inside of this channel. Green support, red resistance. Barely hang on to the 200 exponential and simple at this point in time. I suspect it has topped out for the third time at resistance here and is headed back down to these moving averages, or potentially $108. This one is a canary in the coal mine for me, as they basically make like 90%. Well, Taiwan does. They make like 75 to 90% of all of the semiconductors, and there's serious semiconductor issues right now around the world. And, you know, obviously that stock does not look particularly good. Intel still looks terrible. Triple bearish divergence on the monthly. Broke down below 200 exponential and simple. Looks absolutely terrible. I expect this thing to see some serious downside. Nvidia looks great at all-time highs, continuing to break to all-time highs. We are seeing some bearishness showing up, but I do expect that to just be on the short term, with a support at 211. After that, a retest at 190, potentially as low as 170, but to me that will be a buying opportunity. AMD starting to roll back over. 8 and 21 cross to the downside. Tagged the 1.618 perfectly off of that previous high back here from January 2021 to our low down here in May of 2021. Looks like we are potentially getting ready to sell back off, retest our breakout high right here at $100 or potentially 90. I think this is extremely overvalued right now and looks a lot like a meme stock to me. But I mean, maybe not. Maybe there's some technicals behind it. SMH, Vanex Semiconductor ETF. This thing is just floating to the upside. Still looks great. I like to use this as a representation of the semiconductor space. And obviously from our confirmed breakout of the red resistance at 259, we obviously broke out from that. And I do expect us to eventually meet our target up here at roughly $300 to $324. But it is very clearly trading inside of an ascending channel with a yellow support right here that you can probably barely see and a yellow resistance right here. So we are very close to topping out. If we get the breakout, I would expect a measured move of the channel in addition to the measured move of our ascending channel triangle that we already broke out from. So I'd say overall bullish. ARKK we already did. Poor Kathy. ARKF looks terrible as well. Skills looks like it's trying to bottom out right here at our entry point from the initial trade setup. You could arguably take the same trade setup again and say, well, this is a low, that's a higher low, here's another higher low. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Definitely a possibility we come up here to retest the 200 exponential and simple, but at this point in time, you know, we are basically below all previous price action. There is just way too much overhead resistance, you know, in my opinion, to get involved with this. You know, this is all downward pressure from all the people that bought throughout this entire phase. And then we have this tiny little sliver at the bottom here and a tiny little sliver at the bottom here of people that are not upside down in their position. So as far as I'm concerned, not really interested right now. And also on top of that, we are well below 200 exponential and simple. While we could potentially retest them, they are both sloped to the downside and clearly in a bear market. Teladoc, very weak. 200 exponential and simple have rolled over to the downside. Could not even get back up to retest them. And here we are for a triple bottom retest right here. I do expect this to break, and probably our next key Fibonacci, the 0.5 at 112. Or if we see a capitulation event, potentially back down here to like 86. But very weak. Palantir looking decent, moderately strong right here. I would say we have a low, a higher low, and then, you know, arguably back above the 200 exponential and simple, both slope to the upside. We have resistance here that we're at right now, basically at $27.40. If we break through that, I think we're probably going to retest 31.50. After that, probably all-time highs. $40+ picking up some momentum to the upside. Palantir looks pretty good. You know, it's basically just looking like an ascending triangle at this point in time. While it is difficult to break through a resistance like this, you know, we're basically squeezing into the tip of this pattern, and you know, it is a bullish pattern technically. So a measured move break for Palantir from the, you know, low of the channel to the top of the channel. You could argue we're looking at basically a something like a target up here, somewhere around, you know, roughly like 37, 38 bucks. So essentially just the retest of the highs. But it does look pretty good. It does look pretty bullish overall. If we switch to the weekly, looks good. Save the 821 cross, retesting resistance. I think Palantir is going to go higher, you know, based on technicals. UBX, Unity Biotech Holdings, back down here, retesting support. This looks like it's probably going to break. It's at 291 now. This thing has gotten absolutely crushed. And like literally, you know, unless you like scalped and got out of a position, but arguably, you know, this is my point with this one. There's all these people that have ever bought into this company are upside down in their position from 2018. And then you have this little itty bitty sliver of people right here. You had like a 3-day period where if you bought, you might have made profit on it. But everybody else is upside down. So typically companies like this are going to just keep going down and down and down. Might see another pop to the upside. This is a key support, obviously, because that was the previous low. But there's nothing in this chart right now that tells me this is going to be the low and all of a sudden it's just going to turn around. So in my opinion, this is catching a knife, and I'm just not interested in doing that. I suspect this thing will break down and continue going lower, continue capitulating. Unity Software Inc. You know, still currently in the trade off the ascending triangle. We basically met the target to the upside here. Potential for our next target to the 786, 20%. Took some profits, obviously, along the way, as always, because we not no greedy ones. Zillow looks like a failed trade setup as far as I'm concerned. Thought there was potential to come back up here and retest 200 exponential or simple, but it looks very weak. There's also no reason for this to look so weak right now, as, you know, basically real estate's crushing it. You know, they're acquiring massive amounts of customers, reaching new people, and the stock just looks absolutely terrible. 200 exponential and simple have both rolled over to the downside. We're very close to retesting that 382, which was some key support back here. So it's basically just below us now, 85 bucks. At that point in time, though, if that lets go, I think more realistically, the 0.5 is our target. I think $64 is probably where this is going. We may see again a reaction rally off like 85. As you know, there were quite a few people stepped in, you know, assuming we would bounce that double bottom and potentially move to the upside. But at this point in time, all we're seeing is weakness. 200 exponential and simple have rolled over. It is in a bear market, based on my strategy. Corsair, Gaming, CRSR, still in the active trade right here. Obviously, almost hit the trade setup like immediately, but still just floating to the upside. Still potential for the 20% to play out. You could argue or double down on your trade like we discussed right here at $28. Still slightly up from that. Momentum in its favor. It is below the 200 exponential and simple. They've both rolled over to the downside. So while I am macro still bearish on this for now, it definitely looks like there's still some potential for upside. But I do expect it eventually to get back down here to like $23. Potentially as low as $18, but this is still an active scalp. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please, your own research, trade responsibly. Zoom still looks very weak. Had that massive gap to the downside. Attempted to get back above the 8. Could not do it. Retesting the lows back here from May of 2021. Very clearly inside of the bearish control zone. The bears are in control. 200 exponential and simple have rolled over to the downside. This thing looks like it's about to let go. I do expect this to come down to like 229. At which point in time I will probably be a buyer. We are also operating inside of this descending channel, have been operating inside the descending channel. I think that there's definitely some meat to be had here off of that like 225 area for potential target to the upside. We are bouncing currently the heart line or attempting to, but I don't think it's going to hold. 200 exponential and simple have rolled over. Zoom looks very weak. Square still operating inside the channel that it has been operating in this whole entire time. I did expect it to continue selling off as we lost the 821 and the ascending support right here. We touched the 200 simple perfectly. We touched our buying zone, arguably within pennies, in the heart line / 200 exponential. I do expect this to continue to the downside though. If we can't get back above the 8 or 21, we've been trading inside of this range basically since the top back here in October of 2020. So, we're arguably a year sideways inside this thing. And each bounce off the 200 exponential and simple has just gotten like barely any kind of bounce off of it. I think more than likely we're coming back down here to the lows at 191, at which point in time I will be a buyer. It's definitely possible we bounce the heart line and this one more time. I do just expect it to continue putting in the same low or lower lows. So Square looks neutral to weak. PayPal, again, bouncing this ascending support line right here a couple times. Bounced it back up here. Again, another lower high. We did have a very nice scalp here. Had another very nice scalp here. Fell slightly short of our target right there. But again, I do expect it to just bounce this once again. But, overall, bullish target. But again, we've just been going like sideways to slightly up. I think eventually we're going to come down here and test the 200 exponential and simple as they're slowly gaining on us. But looks neutral to decent. Bullish pattern, but again, dead money for a while now. eBay took out the highs, did the majority of the measured move, came back down here, saved the 821 cross, but it looks weak overall. Strong, but short term looks weak. We'll have to see where this comes in at. If this ends up being another higher low, I think we get continuation and we'll start looking at our Fibonacci extensions again. But again, it's everything's starting to look pretty weak here. Very weak, I should say. Snap had a nice little sell-off back down to retest this low again and that previous high. That is obviously a substantial area of support. In the event that this breaks, I was obviously resistance a couple times here and has acted as support a couple times here. In the event that it breaks, I think it's coming down here to 63.37. I am looking to one of two things. I'm really looking for like some options to the downside. Basically like buying some puts or selling some calls maybe, or potentially a long position from the 200 exponential and simple. But I do think we're going to close this gap here sometime in the near future. So I've been talking about it, and I will probably, I really need to just look at the actual options positions on this, because this is going to be a good play. It's a pretty big, that gap up. I mean, from where we're at now with 821 crossing to the downside, if we even just come down and close the gap, it's 13% position or a long back to the upside. Even if we just come back up to resistance after we close the gap, we're looking at like 16%. So there's going to be a trade here very soon if it's not already developing. Apple starting to look weak for the first time now. We hit the measure move breakout of the ascending triangle here basically came up perfectly, tagged our target and the 1.382 or 2.5 of the Fibonacci extension. We were able to save the ascending trend line, broke down from it. We have this clear resistance that had or should have turned support right here. We broke down from it, retested it. The 8 and 21 are about to cross to the downside. Their recent little Apple day was an absolute joke. They're like, oh, we just made the same phone one more time and we're going to have more iWatches and other stuff. And now the App Store is going to potentially lose a massive amount of its revenue, which obviously makes up for a large amount of Apple's revenue. Therefore, probably is overvalued right now, in my opinion. I think we're coming down here to retest the 200 exponential and simple. If this area breaks, we'll have some support slightly lower through this area, but I really think this is where we're coming in. So I'm looking for, a potential purchase on Apple. We also have some bearish divergence that developed. Looks very weak right now, for one of the strongest stocks. Amazon, again, came back up perfectly, closed the gap. Beautiful trade, small percentage, but, it's a blue chip. Same with Apple. You don't expect to get rich off of these short term, but long term, they're great to have. And, in the words of Kathy Wood, I treat them like cash. I sell them at the bottom and buy them at the tops. We got this very clear resistance. We got the little throw over outside of resistance, and we have not been able to get back above it. We bounced the heart line here once. If we come down to the heart line again, I think we probably bounce it at 3,200. But if we don't see a new higher high very soon, I think we're coming down to 28.75, at which point in time I'll be a buyer. We've been trading inside of this channel literally for over a year, so I would expect us to continue trading inside this channel for probably another year. July 2020. So over a year we've been in this channel, and then we had one fake out or one failed rally or one throw over. So barely just hanging on to the 200 exponential and simple at this point in time. Facebook, overall pretty strong, well above the 200 exponential and simple. Looks weak here though. Also, these tech companies may be getting in a little trouble here. Also, Instagram and Facebook having like some negative FUD coming out because like they're just not healthy for like humanity, in my opinion, which is why I don't use social media, because it's basically trash. It's where like people who hate their lives, hate their bodies, or are mad and just want to like fight with other people go to fight with each other. And then you sprinkle on a little bit of cool shit and positivity on like certain sites. But overall, toxically negative and horrible for people, especially children. Google, very strong, by far the strongest. Showing some weakness here, but very, very strong. No reason to doubt that this will be anything but strong for any time in the future. We'll have to wait and see, but it's probably just going to melt up. And then, we just looked at Amazon. I went backwards. Last but not least of the tech and friends, Netflix obviously got a nice breakout as expected. And then from that point in time, topped out, did not get the measure move of the channel. As predicted, is coming back down to retest the breakout point. If that holds, that's great. If not, we will see if my Netflix target plays out. Obviously, I have predicted a 5-wave retracement on Netflix. Maybe it'll just be an ABC correction on Netflix, but I think it's going to be very weak here. I do not expect this to do well long term. We obviously have been trading inside this range since June of 2020. Yep, so again, one of the biggest stocks in the market, and it has been literally doing nothing for a year at this point in time. It's like the Kathy Wood of streaming services. Haha, got him. Let's look at our cryptos. Ethereum had a strong day today, broke back above and crossed the 821 to the upside. Still one of the strongest cryptos, but we have lost the slope line now. We bounced the zero line. Stokes are trending to the downside, so it's trying to save the trend. But overall, I don't love this price action on Ethereum. Really got to be above $4,000 to be bullish on this. ETH to Bitcoin ratio came down and tagged our target perfectly, the bottom of this channel. I do expect it to probably strengthen in comparison to Bitcoin. How does it do that? Well, either Bitcoin goes down faster or ETH goes up faster, either one. Bitcoin has essentially, futures chart has Stop the 821 cross is back on top of it, and 200 exponential and simple are still sloped to the upside. We have a bunch of red histograms in a row, and we have broken down below the slope line. Hard sell, left the bullish control zone. So again, this looks to me like a potential market top lower high. We have to really be careful here at these areas, because this is when people get absolutely wrecked, because someone like me is thinking I'm going to sell into this lower high before we go into a bear market, and all the little FOMO boys out there, the whole crypto circle jerk, all they're screaming about right now is last chance to buy below 50,000, golden cross, how about golden shower, in my opinion. But what do I know? We just showed you like 50 other charts that looked exactly like this that broke down violently afterwards. Bitcoin on the Bitstamp chart with our moving averages. Again, we're trying now to save the 821 cross to the upside, back on top of it. Barely hanging on to the 200 simple, slightly above the 200 exponential. The longer amount of time we spend in this area, the tighter the two of them are going to get. If we cross the 200 exponential back to the upside, start moving back up, that's great. But we have quite a bit of overhead resistance. And this, to me, is very strong resistance area through here. We got a high right here, which was essentially a lower high. We do not want to see another lower high. If we take out this high right here, it can start looking bullish again, but doesn't look great. We actually pulled some quick little bullish divergence once again on this to anybody who took that scalp trade. Couple people were talking about it in the group, obviously. We have a low right here, we have a lower low here, and we have a lower low here. We have a low right here, a higher low here, a higher low here, some triple bullish divergence, and then off of that divergence, got a pretty nice move. 10% on Bitcoin, bunch more on alts. Obviously, everybody knows what this FOMO crazy candle was. Doesn't look that bad on here, but on the Litecoin chart, obviously looks much different. I will go through all these, but since we're talking about it, this was the Litecoin candle right here. Basically, somebody fraudulently came out and said Walmart was going to start taking Litecoin, and then Charlie Lee and the Litecoin crew came out and said, this is great news. Well, I don't know why Charlie Lee would tweet that, since he's like the fucking founder of Litecoin and in charge of Litecoin. So you would think if he knew Walmart was going to take Litecoin, if anybody did, but apparently he did not know, because he's a fucking moron, and Litecoin is still trash, and it's probably even more trashier than ever, because it had like a 20 to 30% move up that immediately sold off, and still has not made a new all-time high this cycle. So Litecoin is definitely still on the list of shitcoins, in my opinion, true shitcoins. Solana obviously once again proves that this space is completely overpriced and completely underdeveloped. Not just the exchanges, but the projects as well, as Solana network crashed again. It crashed not that long ago, and now it crashed again for like 12 hours, went completely down, and then since then has sold off pretty violently. This thing had a massive move up. We were very bullish on Solana back here at $41. I am very bullish here at $200. I obviously jumped the gun and took quite a bit of profits off the table at $100, but that's still like a 2.5x, and then obviously sold off the majority of the remainder of the position at $200, as I do like nice round numbers. This looks very weak to me right now. All red histograms, hard sell signal, left the bullish control zone. Solana probably not going to see those highs anytime soon again, but it is possible. FTT, what's that? FTX. This isn't Phantom, is it? Oh, I can't remember what it is. FTX, somebody asked me to look at it. Looks decent. Up here at the highs. Blue sky breakout as far as I'm concerned. Well above 200 exponential and simple. Showing some weakness here. Hard sell, bunch of red histograms. It's really got to hang on to this area here at like 66. If it does, no reason it can't just keep seeing higher highs. We've got some. That was the 1.236. If it breaks back out above that level, 1.382 is at 94, at which point in time it's probably just going to 105, maybe 100, nice round number. But if it breaks down, obviously the previous all-time high and the 236, or alternatively 56. But again, it looks stronger than most at this point in time. This to me tells me the market is topping out. Bitcoin can't break to a new all-time high, but a bunch of random alts are one at a time breaking to new all-time highs. That's just the money moving around, musical chairs before the end. Eventually the game stops, but right now the music is still playing. You just got to make sure you sit down on a chair. Chain link. We had that nice little move up here, then capitulation dump. Looks like we're about to just play out that same 20% move again. We really need, if this is going to do anything, it has to break above 35 bucks. It's definitely starting to show. It's arguably still okay. It's above the 200 exponential and simple. It saved the 821 cross to the downside, but it really just needs to break above like $35. At which point in time, it probably just goes back up. Retest 43, retest 52, and then all-time highs. Blue sky, if it gets there. FTM, Phantom, looks pretty good. Blue sky breakout, retest to 21, back on top of the 8, trying to find support. 200 exponential is actually crossing back above the 200 simple. Bunch of red histograms, hard sell signal coming out of the bullish control zone, but still looks decent. Honestly, one of the stronger cryptos still. SRM, basically broke out to a new all-time high, came back down and did not hold the resistance as support, but still above the 21. It did break down from the 8 though, showing some definite weakness. Hard sell signal, bunch of red histograms. Don't want to see this thing come back down to the 200 exponential and simple. Could easily lose like 40% of its value. But if it stays up here long enough, it looks like it's going to break to the upside. If it stays above this area long enough, target of $20, 100% move to the upside. But it really just needs to get back up and show some strength. It needs another Viagra, if you know what I'm saying. XRP brains, Ripple, XRP. You're not a P brain if you've been hodling XRP this whole entire bull run while everything else just absolutely crushed it. And XRP is the only thing that didn't put in a new all-time high, with the exception of Litecoin and what else? Dash. Sorry, XRP crew. Looks terrible. Back below the 821, barely above the 200 exponential and simple. Slope line is flipped over red. I have target potential here for XRP to come up here and put in a new high at $4.39. There is a possibility that it actually does something eventually based on Fibonacci extensions. Maybe they win their case. Maybe they just pay off the SEC mafia. But right now, it still looks like shit. And the clock is ticking for XRP and Litecoin and all these ones that have not put in an all-time high. The hourglass is flipped over. There's 4 grains of sand left in the hourglass, and everything else has busted through the glass ceiling and gone absolutely parabolic. And a couple of these shit coins, if the cult doesn't get bigger after a 4-year cycle is done, it's probably dead. It means more people drank the Kool-Aid than are in line to get more Kool-Aid, and we all know what that means. It means dead heartbeat. BAT, basic attention token, was strong here. Sold off exactly at $1 as expected. Below the 821, looks very weak. Slope line is flipped over red. Looks very weak. We'll see, but honestly, looks weak. Uniswap bouncing the 200 exponential back here at the 200 simple, trying to save the trend right now. If it does break up from here, retest $31. Nice little like 10% or so move to the upside. It's going to be very difficult to get through that, but if it does, maybe like 34.50. After that, retest the all-time highs, 43. Looks weak, trying to show a little bit of strength here, trying to cross that 821 back to the upside. Doggy Dogecoin back here sitting on the 200 exponential and simple again. The 200 simple has crossed above the 200 exponential. It is well below that resistance. It cannot get above 30 cents and sustain it. 8 and 21 across the downside. Dogecoin is dead at this point in time. It's dead. It's done. It's better than like XRP and stuff. I put it in an all-time high. It went absolutely parabolic, but nobody's interested in it. There's a million other meme coins. ADA, Cardano, just go figure, buy the rumor, sell the news. This was the new smart contracts. Now there's new smart contracts. And all of a sudden, everybody realized Cardano is actually still just a piece of shit. Yep. And Charles Hoskinson. So that's bearish, obviously. But it did hit a new all-time high, hit $3 perfectly, as expected. Congratulations, Cardano. great. Probably, yeah, I mean, if it stays above here long enough, 231, probably keeps going up. If not, probably coming down to like $1.80 or something like that. I mean, looks very, very weak on the indicator oscillators. Lost the 821. 200 exponentials crossing back above the 200 simple, so could be okay. I mean, it's just, it was cool. It had a big event that everybody's excited for. Now the event has passed, so the euphoria wears off, and then people just go back to buying shitcoins randomly, not buying it for a reason. Sushi had a beautiful move back up here across the 821 back to the upside, blew through the series of lower highs it was putting in. Quite a bit of resistance through this area. It's going to be difficult to get through, but could easily see $17 after that. 21.50 or all-time highs, maybe? No, probably not. Coinbase highs? I probably have to pull up a different chart, but it's trying to cross back to the upside. It looks bullish, honestly. I mean, of course, after it just went up 50%, it's hard not to look bullish. Matic, trading very technically still, was finding clear support at the 0.5, broke down below it, finding clear resistance, found support again. Looks like it wants to head back up to the 618, $1.58 for Matic. Looks very likely. Seeing some weakness, but wants to cross the 821 back to the upside. Polkadot, ton of resistance overhead here. Had a very nice move off of the 200 exponential. Was able to find support and hold on the 200 simple. 8 and 21 are crossed to the upside. It really looks like it wants to move up here. It went out of style there for a little bit, but overall, there's a lot of resistance through here, but it looks like it wants to keep creeping. Keep creeping. Keep creeping. Starting to develop some potential bearish divergence, but still looks good. Litecoin we talked about. Bitcoin dominance makes me think that this cycle has topped out, obviously. I mean, we just put in a new low. I expect this to continue selling off as altcoins go nuts and Bitcoin goes sideways, or at the initial phase of the sell-off, people hold their altcoins and eventually capitulate. Total market cap overall strong. Basically was able to reclaim that area, was able to stop a bearish candle. Looks like we are potentially going to have not technically. Looks okay. I mean, we crossed back above the slope line. Slope line still blue. All green histograms. Hard buy off the bottom zone. Cross the 821 back to the upside. This is the weekly chart. Still looks good. Right up until it doesn't. No thanks to Bitcoin. Riot blockchain looks terrible. Broke down now below the 200 exponential. 200 simple is above the 200 exponential. Looks like it is getting ready to roll over and capitulate. Looks very bearish. I shouldn't say very bearish. Looks pretty bearish. MicroStrategy, old laser eyes Mikey Saylor bought some more Bitcoins at 48,000. So he's back to even on them. I believe now MicroStrategy has thousands of Bitcoins, and a average cost basis I think was right around 28 or 29,000. So he's still up nicely on those positions. Up about 18,000 per coin. Pretty good, pretty good. Old laser eyes Mikey failure. Yeah, I mean, finding support at a key area, bouncing barely the 200 simple, looks weak, but still on top of it for now. 200 simple is basically just propping this up. Want to see some kind of bounce and take out this high. Want to see it above 800. Could be a nice move right there, but still looks weak. Bears are in control. All red histograms. Let's just to remind ourselves about Michael Saylor. Yeah, so he did have MicroStrategy at $3,200 during the dot-com bust. It did go from over $3,200 to roughly $4. It did lose 99.8% of its value. He did get fined by the SEC and had to pay millions and millions of dollars to not go to jail. So he is a scumbag. His stock is a piece of shit that will probably never go to new all-time highs again. But he did use the crypto cult and Bitcoin to pump his shitty stock up from $100. So I do have to give him props on that. He did take over as one of the cult leaders. But MicroStrategy still looks like shit and has looked like shit for 20-something years. Looks better, but still shitty. Coinbase weak. Another in a series of lower highs. Sold back off. Probably going to dump from here. Again, outages during high volatility. Tons of people getting their accounts stolen. Can't get through to, get help from Coinbase because they don't have a phone line that they can answer. And they take weeks or months to get back to you by email. No excuse for a 60-something billion dollar company. Looks like shit. Basically, just trash for now. Robinhood, again, looks terrible. Had a nice little pump up here. Back, sold off massively. Lost over 50% of its value. Trying to put in some strength here. One green histogram on the daily. Still inside the bearish control zone. Still below the 8 EMA. Too soon to tell, but trying to push up here. A bunch of resistance overhead, though. Looks bad. GME, GameStonk, still looks decent here. Back above the 8 and 21. Rallied off the 21 here. A bunch of red histograms, but it does have the blue slope line. It is above the 0 line. Looks like it's trying to push back up here. I would expect resistance at 216. After that, 223. If it can break through those levels, though, this thing could run. But where are the stonkers? Where's the old diamond handers? AMC, still bullish as I was talking about in the previous video. It's starting to lose strength here. The stochastics look weak. It does look like it wants to break down from the bullish control zone. It did have a very bearish candle come in here. Was able to save that horrible dump that it initially got. Somebody apparently does not have diamond hands if they were capitulating into this move here. But it did save that move. Did top out very technically at the 618. So apparently someone is using technical analysis on this. I literally just thought it was a bunch of apes running around with bananas, throwing poop and peeing in each other's mouths. I apologize. Apparently someone is using technical analysis on this chart other than me. I thought I was the only one. All green histograms, couple reds now. It is above the red slope line, but well above the 0 line. So there is possibility that this thing could continue to the upside, but probably going to roll over and just retest $28 again. Probably. I think we got options expiring. I mean, I know we do, but I don't know what the levels are. I would have to look, but probably going to make sure that about 90% of those options expire worthless, just because that's a statistical fact. Bed Bath & Beyond showing some potential here. Not because it's good. It's below the 200 exponential and simple. They're rolling over. But I think there's a very high likelihood that we bounce the bottom of this descending triangle again and just put in another in a series of lower highs. Looks pretty tired. But we'll see. If it starts to, there's a lot of overhead resistance right above it. But 6% stop loss, 51% upside. It's like almost 10 to 1, 8 to 1 risk reward. Newegg bounced the bottom of the channel. Came back to the bottom of the channel. Trying to do something. Looks like it's getting ready to break down. Still just operating inside this range. The same range we've been talking about for literally a month at this point in time. I do expect Newegg down at $14 soon. I may even throw a option play in on this. I honestly just think Newegg's just waiting to roll over here. I'm surprised it stayed this long. This whole time it went sideways. It could not roll the 821 back to the upside. Its only hope is to basically just get back above 1850 and stay above it. But I just don't think it has the same following as these meme stocks. DraftKings broke above that little channel we were developing here, broke down below it, and now it's acting as resistance. It's finding support on the 618. Last time it found support was at the 382. Could it come down here and retest 200 exponential and simple? It could. Looks decent. We're seeing some weakness in the indicator oscillators. I do expect it to retest all-time highs, and we're coming into some serious sports betting season with football and whatnot. So and then who knows? I think online betting is really where it's at now. I think casinos are probably going to get wrecked, especially if they're located in China. But we'll see. I think it's a big change, and I think, it depends. As more states legalize gambling to try to generate revenue, maybe that will change things, but I think people just want to gamble online in their jammies. Zao Gold XAU below the 200 exponential and simple still looks very weak. Hard sell signal, bunch of red histograms, slightly above the blue here, below all the moving averages. Looks like it just wants to break down again. XAG silver well below 200 exponential and simple. They have rolled over below the 8921. Blue trying to show some strength here on the slope line, but this looks very weak. It was strong for a long time. Now it looks very weak. Gold silver ratio still trending to the upside below the 200 exponential and simple on the weekly. Inside the bullish control zone, bunch of green histograms, blue slope. I still think gold will gain strength compared to silver, whether it's to the up or downside or somewhere in between. XPT platinum broke down, took out the lows, very bearish. Looks very, very bearish. We're at a key support level back here, but you know, you could argue that if we're not going to be making as many cars and we can't get catalytic, we don't need catalytic converters. We don't really need platinum. Maybe there's going to be all these EV cars. So we're not worried about these ICE engines. We don't need this. We don't need that. Platinum, weak. Very undervalued, underperformer of the metals. AG, First Majestic, had talked about bullishness potentially in the space. I don't love the gold chart. I definitely don't love the silver chart. But these miners are looking good here. You know, below the 200 exponential with a red slope, below the 200 simple, still have a blue slope, but trying to put in a bottom right here. We had a drive of bullish divergence between these 2 points. Got a nice push up. Looked like a little toppy there. Trying to cross the 821 back to the upside. Definitely looks like some potential for a scalp. 10% to 20%. Quick little play. Gaining momentum to the upside. We're seeing a hard sell signal. We are at, you know, a key resistance, but, you know, basically trying to break above it. Definitely some potential here for some First Majestic scalp action. Silver Juniors, SILJ, similar chart. You know, some bullish divergence between these points right here. You know, trying to get a move back to the upside. 821, trying to cross. 200 exponential and simple are bearish. At the top of what we would need to hold as support, and it failed. Now it's acting as resistance. So either we save price action very soon or we go to $12 and probably going to continue bearish, honestly. But trying to put in some kind of temporary bottom. USAS, same thing. Little bullish divergence between these points right here. You know, back inside of this descending channel or wedge, depending how you look at it. Trade setup in play for a 47% potential move to the upside with a 11.5% downside just to retest the top of the channel, just to retest the 0.5. Could it easily top out at the 618 here and then sell off? Yeah, it definitely could. This thing has been getting absolutely crushed though. So at under $1, it looked pretty juicy, or around $1. So, but again, I'm not bullish on these miners massively, but for a quick scalp, they look okay. And potentially turns into a position, turns into a swing trade, turns into a, you know, killer sector, maybe. Pot stocks, same thing, getting absolutely crushed here, breaking down from key levels, starting to try to maybe put in a bottom again here. I don't even know how these things can keep going down anymore, but they sure are. Below 200 exponential and simple. Tilray looks weak, but it's trying to bottom here, I feel like. ACB, same thing, looks very, very weak. Below 200 exponential and simple. Slope to the downside. Very, very weak here. Trying to bottom here as it's trying to put in some bullish divergence once again. CGC, Canopy Growth, once again, just getting absolutely crushed. Looks much, much worse. Broke down from a key level and is continuing to just sell off. Basically at a key support level here. If it sells off from here, it's probably going to retest its all-time lows. It's trying to do something, I feel like. I just don't think anyone is interested in pot stocks right now. URA, this sector is obviously going ballistic. It's probably the best performing sector over the last couple days to weeks. People are talking about it. It's uranium. It's not supposed to be exciting. It's not supposed to go up. It goes into like 30-year bear markets. So the fact that it's just pumping right now and it's cool, it's basically Sprott version of a meme stock as far as I'm concerned. UEC, this thing just went absolutely parabolic today. It was up like 20% today. I do have positions in these uranium plays. Unfortunately, I took some profits a little too early. But again, I'd rather lock them in because, you know, this is basically just Sprott plus momentum. So we'll see what happens. But look like they could just keep shooting up here. Not anywhere close to all-time highs, but cycle highs for sure. CCJ, same thing, broke above key level, retested it as support, held it. We do have this crazy little channel that we are retesting the bottom of and failing to break above. Is it topping out? Maybe. Still strength, still technically strength. Looks like it wants to break down from here though. URNM, North Shore Global Uranium Mining ETF, broke above that key resistance, came back down, retested for support, and it's gone. Definitely strong still. Copper showing a little bit of strength off the 200 exponential and simple, but as far as I'm concerned, until we break through this high of 28 bucks, just a series of lower highs. LIT back up here, retesting the highs again. Do we make it to 1.5 finally? Do we get to 1.618? I don't know. I took most of my profits on this. Looks like an ascending triangle. It's trying to break out. Hydrogen, HYDR, did exactly what we said. Broke above. Could not hold support. Capitulated down. Coming down here to retest the lows. I think it'll be back down at 21 bucks real soon. This is not really like that tradable of a range though. You know, it's like a 10% range. So, you know, once this thing breaks in one direction or the other, there'll be some trades for sure in it. But I do like the space. I do like a lot of these, you know, EV metal plays and stuff. But I think Kathy and the EV play is way ahead of time. And like all these metals and commodities are like breaking out to new all-time highs. People are bullish on all this stuff. Solar panel prices are through the roof. Copper prices are through the roof. You know, steel prices are strong. You know, lithium, nickel, cobalt, hydrogen, all these things are expensive right now. How are we going to build all this infrastructure? How are we going to build all this EV stuff? How are we going to build all these things short term? How are we going to dethrone oil? How are we going to get that clean energy when everything's at record highs? It's just going to make most of that stuff's already not profitable or barely break even. So it's just not sustainable right now. Eventually it will be, but just not now. I'm much more bullish on uranium and nucleus. Lumber, it's trying to bottom here. Like I said, this looks like an inverted head and shoulders waiting to play out. We have a clear neckline at the 0.5. We have a left shoulder. We have a head. We're coming down, right shoulder, trying to break up here. It had a beautiful play, obviously, 40% move off of the entry back here. The 821 have crossed to the upside, but it looks weak, well below 200 exponential and simple, and they are both angled to the downside. Has some momentum in its favor. Triple bullish divergence has played out beautifully. Could easily see the rest of the trade play out back to retest the 382 at 828, but I do not think it gets through there anytime soon. Caterpillar breaking down from the 200 exponential and simple, looks weak, barely hanging on. Deer slightly stronger, but lost our ascending blue support line. Clearly breaking down 821 cross. Looks like we're coming down to the 200 exponential and simple. Antero Midstream Corporation, AM, water play, retesting the highs. Looks like it's breaking out, probably going much higher. I think it's going to start retesting some of these previous levels. It looks like this thing's going to 13 bucks. There's some definite resistance above our head right here, but I mean, we're back here retesting this area off the 200 exponential and simple. So, you know, we'll find out real soon. If this thing starts to break back out, it's going to 13 bucks. Nice little 30% play. Cemex, back down here at our target area. Got there even quicker than I thought. Just trading inside this range as far as I'm concerned. This is a buy off the 200 exponential and simple, but it looks weak. It could literally break down at any time. And when it does, it is not going to be good. Cleveland Cliffs, neutral to weak, came down, hit our target area sooner than expected. Again, I did not expect these to just sell off right away, but you know, this is going to act as support, 20 bucks or so. And then obviously, I mean, this thing looks weak. It really does. It broke down from the key channel. Looks weak. Ford overall looks weak. Back down here at 200 exponential and simple. I'm fundamentally, though, I don't hate Ford. But, I mean, fundamentally, though, it also has a lot of headwinds. We'll see what happens. These, like, EV credits and unionization and all the stuff coming on from the Biden administration definitely could put some tailwinds behind, like Ford and GM. GM looks weaker, below the 200 exponential, 200 simple, rolling over. Had a nice little move up here off the bottom, but you know, it's gaining some momentum, flipping the blue slope line over a little bit, but it looks weak, but maybe it's bottomed for now. Hasbro, weak again. Nice bullish candle came in here, but barely hanging on to the 200 exponential and simple. I really need to see it break above these key resistances. Until it gets above that 786 at like $100 and maintains, I can't get bullish on this. Works, you know, back down here at our target on the 200 exponential. Got to see what happens with price action here in the next couple of days, but you know, this looks like a buy to me, honestly. Back above the 200 exponential and simple on the daily. There's definitely potential for a scalp here. If it holds the 21 here, I think we come back up and retest the 382. 143% move to the upside, 26% potential breakdown, maybe even less. We could run a real tight stop if it starts moving against us at all. It's starting to pick up momentum. Still looks like total shit, but for a scalp, 100% move could happen quick. Any Sphere had a beautiful move today. Did not get down to our target yet, but maybe will sometime in the near future. Again, this thing looks like it's bottoming out. I want to see it come back here and retest the 200 exponential and simple. I'd like to get it in here in a good place, but I'm not just going to jump back in because of FOMO. Totally shit, but nice scalps. Weight Watchers looks terrible. Back down here, new low. It's at basically that previous low. I mean, it just looks terrible. It's got to show some strength here or some divergence or something before I'm even interested. Walmart coming down to our target. Looks like we're going to get that entry real soon. It's only like 3% upside potential. There's no trade to be had here. Looks weak overall. I mean, it's still 2-to-1, but it's 3%. Excuse me. Ugh. Western Asset Mortgage Capital Corporation, aka the WMC. Somebody asked me to look at this. Getting absolutely crushed. Breaking down from a key support below the 200 exponential and simple. Looks like this thing's about to get wrecked. If it lets go of this area, I mean, it's going down to $2. So, but it is picking up a little bit of momentum. Bears are still in control. It's trying to do something here, but it looks very weak. So, that's it for today, guys. Hopefully y'all enjoyed the stream. Kept it just around 3 hours, so definitely on the long side. I will do some excerpts from the stream into some shorter videos for those people that did not watch the whole thing. So if you missed something or whatever, or if you see those static videos pop up, it is nothing particularly interesting. Keep in mind, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsible. This is not financial advice. I am, in fact, out of and have taken profits on quite a few of my crypto positions. I did rebalance my portfolio, or I'm starting to, a little bit ahead of time as we are coming up on the end of the third quarter, and quite a few of the cryptos have just gone absolutely parabolic. So spending some time doing all that. If you are interested in the TJD Master, the indicator I've been using with the moving averages and basically the strategy I discussed, please let me know. Reach out via email or in the comments section, and you're more than welcome to join our tight-knit community of group members, or alternatively, you can just buy the indicator if you want for $100, one-time purchase, and it's yours forever. And you can obviously use my strategy, and I will provide for you also the video on exactly how to use that strategy, although I talk about it all the time, including in this video here. So if you were here for the end, if you're still here right now, I appreciate you. Appreciate you. Anyone watching this later on, Chinese, Ethereum, please. Neo. I can look at Neo real quick, dude. It's been a while since I've looked at it. I don't know when you asked that, but I will take a look. Hang on. Chinese Ethereum. The old Neo. Binance has a pretty good. Oh, man. It doesn't look great, man. Looks like it's rolling over pretty bad here. It's hanging on to the... Oh, shit. Did I? It's hanging on to the 200 exponential below the 200 simple. Looks very weak. It's hanging on for now. As long as it's above $48, it's still okay. But it has lost the red slope line. Has flipped over. It's still below the 200 simple. It looks very weak. And honestly, just because of like China and what's going on right now, I mean, the cryptos are a little less correlated to like Chinese stock market, but that's probably not, it looks very weak. If it breaks to the upside, it's going to try to retest 65, but it's going to be hard to get above 55. And if it breaks below 47, it's probably going to dump to like 37. It looks very weak, man. I would not want to be holding it right now. There's a million other things that look a million times better. Even other shitty cryptos that look better. Oh, and I see Bitcoin's having a little throw over. What's your take on the short squeeze potential for AMC and GME? Honkiness. I have not recently looked at the short interest on AMC and GME, but you know, typically those are like a short squeeze should be a quick in and out, not a diamond hands thing. I think they're both total shit companies. They have ridiculous valuations and both have horrible actual like prospects as a business. They were great back in the 90s, 2000s. I used AMC and GameStop many times. You could argue that GameStop was a piece of shit for ripping you off for years before. But, you know, short squeeze wise, sure, they were good for a while and the short squeezes played out. I don't know if they have enough short interest open right now. I don't know that. I think that trade is done with, and I think eventually you're more likely going to get stuck holding the bag on those. They both look mediocre to bullishly neutral right now, but there's a million other things that have a million better charts and actual fundamentals or technicals. If you're going to speculate on something shitty, you might as well speculate on a crypto, I think, that has no like earnings or anything. But actual GameStop and AMC as companies are fucking terrible, and their valuations are way too high. So I think the short squeeze was great, but I think it's done, man. You know, I think a bunch of people who got in early on them or who have taken profits will do extremely well. But I think eventually they will end up right back where they belong. Until they come out with an actual plan on how they're going to turn around their actual companies and look like legitimate, good, profitable companies. And even then, once they have a plan, they still have to successfully execute that plan. And they're so far away from anything like that. And that GameStop earnings call was basically just like, hey, I'm not going to take any questions. It's going to be super short and I'm out of here. That does not give me confidence if you think like, oh, GameStop's going to turn around the company. And AMC's plan is what? Like what is their plan? We're going to accept cryptocurrency for popcorn and movie tickets? Like, even if they came out and said, oh, we're going to start drive-in movie theaters again. We're going to start our own streaming service. Like something. Come up with something. But, you know, even then, the likelihood of success to pivot your business is probably extremely low. I think they're both total shit, man, honestly. But, you know, that's just me. But yeah, that's it for today, guys. Appreciate everybody that tuned in. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Remember that the only person Cathie Wood has made rich in the last year, all of 2021, is herself and the people directly correlated with her and her fund and employed by her. No one that has bought that stock this year, nor probably will in the next couple of years, make money. And if you would have just bought oil, you would actually have done better than Cathie over that same period of time, and probably over the next 6 months as well. So, Cathie, you suck, jackass. Thanks for your big help. They do continue to rip 30% though at times, for sure, man. And there's definitely volatility there. I called out the volatility on AMC before that last rip up. You could have definitely gotten a piece of that. But the truth is, man, for me, I will scalp something like that, but I'm not. The whole diamond hands narrative is going to end up fucking so many people. You can scalp something based on volatility, and that's totally cool. I have no problem with that. And you want to be like a Reddit scalper, that's totally cool. But eventually, you're going to get screwed, in my opinion. Eventually. But the whole diamond hands narrative, that is the worst. Like, definitely do not buy these things and hodl. If anything, get in and out and take profits. In my opinion, that's what I I do on scalps. That's what I would do on scalps. I will trade something that's a piece of shit, like a meme stock or a shitty crypto or whatever. Totally cool with that. But the idea of diamond hands and hodl and all that stuff, no. For your own good. For your own good, please no. Please, God, no. But yeah, that's it. But I definitely agree with you, man. But you know what? I would, as far as meme stocks go, I would rather be stuck holding the bag on something like Newegg or Bed Bath & Beyond, that had like a big rip or whatever. But actually, there's a company that could potentially one day be worth more than they're worth now. I do not think AMC or GameStop will ever be a good company again. If they pivot, it's possible. But they have done nothing, and both their business plans are absolute shit, and their valuations are horrible right now. So, but yeah, that's it, guys. Everybody have a great night. Hopefully you enjoyed the video. Hit me up if you're interested in the Discord or the indicator, obviously, or you have any further questions. But that's it for tonight. Crypto Trend Trader, and I'm out of here. It is Wednesday, 11:28 p.m. Eastern Standard Time on September 15th, 2021. Peace. Take care of yourself. Hell yeah, man. Good for you, dude. Good for you, brother. You should be up big. Crush it. But remember, take those profits too. In my opinion, always a good idea. Honkiness, of course, brother. Glad to help you out. Glad